could cause cancer. That's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I'm just going to tell you, it's a two-day Fed meeting happening this week. It's the last Fed meeting of the year. Do you know what we're talking about in studio?
I do, because I put my headphones in to kind of block it out. Spoiler alerts and stuff. I don't want to be a part of that.
It's Peloton, the Sex and the City reboot. We're going to get to that, I guess, maybe, I don't know, later on.
I can't believe that's like a day 3, 4, 5 story here.
Deep tease, it's part of my gamers.
Thanks,
this
Ryan
week.
Reynolds.
All right, it is Monday, December 13th, 2021. We are counting down to the last Fed meeting of the year. It is this week. And speaking of counting down, stocks are down. In fact, near their lows today, although tech really seeming to, once again, feeling a lot of pain here, Tim.
Yeah, Tesla also pulling the NASDAQ and the S&P 500 lower. Hey, Carol, what could possibly go wrong?
Oh, nothing.
Oh, yeah, it's
Everything
the
is
Bloomberg Big
awesome.
Take today. It lines up with the economic risks for 2022 because, hey, we are almost there, and it's time to start thinking about it if you haven't been already.
There's a long list there. We're also going to talk about an interesting column that Spencer Soper wrote, a story about the use of cell phones at work. This is coming after the tragedies over the weekend, the tornadoes that swept through many states, killing a bunch of Americans. So we're going to talk about that in his story. We also have the CEO of Medable on. We're going to talk about the importance of clinical trials. And what else do we have?
The Mental Health Services startup with a nearly $5 billion valuation. That's thanks to the latest funding round led by SoftBank. We're going to talk all about that and more.
And a restaurant that really figured its way through the pandemic. We'll get to it. First up, the Market Drivers Report. Let's set the Business Week agenda, and they too had things to say about Peloton. We may or may not get into it. Kriti Gupta is Bloomberg Markets correspondent at Bloomberg News in our Interactive Broker studio. So too is Katie Greifeld, Bloomberg News cross-asset reporter and Bloomberg Quick Take co-anchor. All right, Kriti, take it away. We're down here on the equity trade.
We are down. It's a tech-led sell-off. No surprise here. I mean, this is going to... which I think a lot of people expected to be in the bond market simply because everyone was saying, is this going to be kind of a faster tapering pace? Are they doubling the pace, which is the consensus estimate? What the deal is actually, bond volatility is actually down compared to last week. All the action seems to be in the FX market because you're not able to really price in essentially what the Fed or the BOE is thinking. So you don't only have kind of volatility in just American assets, you have it across the board, and it's creating some very, very weird ripple effects.
Well, the one thing I will say to that, and we have, 20 central banks and counting or something making decisions this week, is that you're going to start to see a diversion among central bank policy, and that's going to play into the currency trade in a big way. Should we bring in your co-host?
Yeah, Katie Greifeld, co-host of Quick Take Stock. It airs each and every day at noon Eastern time on Quick Take. You can find it at Bloomberg.com/QT and streaming platforms. Was that enough of a plug, Carol?
Yes, and she does not care what's going on with Sex and the City and the reboot.
Right. No, she doesn't.
I tried. As it relates
We talked
to the
about this last
Peloton
week, too.
stock,
I
I
know.
care a little bit,
Well,
but
you care about the bond market.
I do
Yeah,
deeply.
so Kriti brought up some elements of it. What are you watching when it comes to the bond market today?
I mean, it is interesting that you're seeing this nice cascade down the curve where you have the longer duration bonds, the 30-year, really rallying today and leading this rally. And I think it just ties back to all the fears we're seeing reemerge about the variant. And Tim, you and I were talking about this earlier, that it feels really hot and cold whether the market decides to care about that. But if you line it up with, what we're seeing in travel stocks today, that seems to be the feed through into the bond market as well. And I mean, it is a weird time because we are just lying in wait, really, for the Federal Reserve, for Jerome Powell to speak, and this is the fundamental input that we have today.
Yeah, I mean, it really is going to be, what kind of clarification? I put out a little Twitter poll, and it's like, do you expect Jay Powell and company to be more hawkish, more dovish, or pretty much stay the same? And I think it was 50-50, more hawkish and stay the same. So there you have it. Nobody expects them to kind of ease off. And I think there's, I love this big take that we're going to do because, Kriti, we cannot forget that there are a lot of questions still about what what 2022 holds for us.
Yeah, there's still a lot that can go wrong. And I love a line that Lisa Abramowitz said weeks ago, but it's really stuck with me. All it takes is one port closure, one COVID case, one COVID outbreak in one of the major ports in the world, and all of a sudden you have issues. But one of the things, and quick teaser here to the chart of the day, which we will talk about later, but one of the things to keep in mind here is that so much of markets is focused on near-term flows, on what central bank policies are doing. We're completely forgetting that a lot of the markets have to price in trade flows and tariffs that still exist on, say, Chinese imports, and a lot of things that would drive markets in a traditional non-pandemic world that are kind of being put in the background right now simply because the central banks are in the spotlight right now. And I feel like that's what this week is all about.
It's also about crypto.
It always is.
Okay, thank you, Katie. Because
Katie's take on that one.
well, yeah, because we have been, we are entering a potentially fifth week of a slide for Bitcoin. This comes
It's not
just
easy
a few
being
weeks.
Bitcoin right now.
It's not, but but look, it's down another 5.6% today. There's a sell-off in crypto across the board when you type crypto into the Bloomberg terminal. Katie, why? What's going on?
Well, like Creedy said, I mean, look at what is leading the declines. It's tech, and Bitcoin, it's a tech stock more than it is anything else. It's not surprising to see it fall today, but
Not an inflation hedge?
it's
Not digital gold?
I'm not entering that debate just yet. But I will say, if you look at the technicals, and Bitcoin really has to respond to technicals because there's not a lot to go on. It is bumping right up against its 200-day moving average. If it breaks below that, that will be very interesting. We're about $600 away from it at the moment. That is down at about $46,700 per coin, and we are flirting right around with $47,000 right now.
Yeah, I love how you said it. It's like a tech stock. I mean, we do. No, because
That's my hot take.
No, I like your, hashtag hot take, because I do think we're still trying to figure out exactly what this is. And certainly there's a lot more legitimization that's come into the crypto world this year. And thank you, regulators, for helping out with that. And there's going to be, as you talk about, thousands of cryptocurrencies that are out there, that we're starting to filter our way through it. So you start to get a better understanding. And there was like a great column, I'm trying to think, I was reading over the weekend, was it the Wall Street Journal or somebody is like, okay, you really want to understand what crypto's about? All right, let me lay it out for you, because people are still trying to figure it out. Having said that, as we await for the Fed, that two-day meeting getting underway tomorrow, we'll get that decision on Wednesday. I mean, Creedy, if we look at where those major equity averages, I don't know about you, but like looking at my 401k over the weekend, I mean, it has been...
That's what you did over the weekend?
No.
Well, I did a lot. I do a lot of things over the weekend.
Did you get a Christmas tree?
I didn't, because I might wait for when my daughter comes home, and we might actually do it together.
Sorry, I derailed you.
Well, but one thing I did do, because I'd like to do some baking, is walking into a store and a decent-sized bottle of vanilla, $55.
What?
Which vanilla's...
Is that like 55 gallons?
No. It wasn't, vanilla, like it comes in usually
It's
relatively
little.
small. This was about double the size. $55.
Wow.
So, and if you go to like the baking, go into a Target or something, like their shelves were just empty, but things are expensive.
Man, I wish I knew the ticker for vanilla right now.
Well, I know. Well, and it's, I was just kind of surprised. The thing I was going to get to, though, is if you look at those major equity averages, Creedy, I mean, it has been, going back to looking at my 401k and other things over the weekend, it has been an unbelievable, run up when it comes to equities this year.
It absolutely has. I mean, I don't know what we're at, over 20% returns for the S&P 500, but every pullback that we see, even if it's the 1% of the NASDAQ you're seeing, for example, today, they tend to be bought, and they tend to be bought fairly quickly, and that has been a major theme for 2021. So yes, folks, when you do see this major sell-off, yes, it's usually driven by some sort of variant headline or policy decision or whatever, but also keep in mind there are still so many folks on the sidelines, not just here in the States, but around the world, who are still dying to get into the equity market.
All right, we're going to leave it there. Hey, guys, thanks. Creedy Gupta and Katie Greifeld, thank you so much. Let's get to the bite of the day.
It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. You can learn more at GEP.com.
All right, Ford's going to boost its all-electric Mustang Mach-E's next year by 3 times to meet incredible demand. So we're talking about reaching over 200,000 units a year for North America. All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. So interesting stuff going on. It is a Fed week, and so we're going to be counting down to that. In the meantime, we continue to watch those headlines, and you know it's going to come up at that Fed meeting when it comes to what's going on with COVID. And in keeping with that, Fidelity Investments paused its voluntary return-to-office pilot program in New England amid rising COVID-19 risks. We're seeing this with a lot, I feel like, of firms, again, postponing going back to the office.
Yeah, this one actually got my team, who's in the office, got us talking when we saw this cross the terminal earlier today. Here's what happened, Carol. The firm stopped non-essential workers from coming into offices in Boston, Smithfield, Rhode Island, and Merrimack, New Hampshire. That's according to a spokesperson and from an emailed statement. Voluntary return-to-office programs for thousands of employees in other locations around the U.S., those do remain in effect, so it's geographic here.
Well, and that makes sense. It's something we've certainly seen throughout the pandemic. Meantime, another geography, another country, Goldman Sachs Group telling its London staff to work from home if they can as the City of London's biggest firms adjust to its latest government guidance. I guess they put out a memo. Those of you who are able to work from home effectively should do so from Monday, the lender saying last week in an internal memo. The bank's offices will remain open for those who still need to come in. Safety protocols, including an on-site testing program and the wearing of masks away from desks, remain in place.
Yeah, this is exactly why we're seeing those reopening stocks lower on the day today. We're seeing a patchwork of regulations around the world and an understanding of what people are going to do, or investors trying to understand what people are going to do as a result of seeing headlines like this.
And this is all it takes. Creedy mentioned, Lisa Bromwich saying, but we've also talked about it on air that, nothing really matters until we get really away from this pandemic, because we saw just a week or so ago how news about a new variant can just roil financial markets and start to shut down the economy again. And this is what we're seeing.
It's what we're seeing today. It's when it comes to those travel stocks that are leading on the decline today, though. It's hard to understand why, we kind of know the environment we're in, but still that doesn't stop the daily big moves.
No, exactly. So much volatility when it comes to travel, tourism, and hospitality. You're listening to Bloomberg Business Week. Carol Massar, Tim Stenovic, and you are listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all declining. Tech giants being hit hard today. The Dow, the S&P, NASDAQ all red on the screen right now, with the S&P down 0.6%, down 29 points. NASDAQ is lower by 156 points, down 1%. Dow Industrials down 251, down 0.7. And we have got the NASDAQ 100 index down now by 1.1%. 10-year yield, 1.42%. Spot gold up 0.2%, $17.87 the ounce. West Texas Intermediate crude oil down 0.7%, $71.19 a barrel. Citigroup and Macy's have renewed their longtime credit card partnership after the two spent months renegotiating terms of the agreement. Citigroup shares down 0.7%. Macy's, though, hard hit today, down by 7.3%. Recapping, stocks lower, S&P down 29, down 0.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. So how was your weekend?
It was good. It was good. We were starting to see friends again.
Yeah.
We saw these friends over the summer too, and they moved to the suburbs, and we all got together. All of our kids got together, 4 families together. And
how'd that
there was
feel?
It felt good. There was a lot of discussion about COVID testing ahead of time. Really from about a week before we all got together, who just got back from an international trip. You guys need to get tested, but you got to wait 3 days to go get tested, or 4 days. A lot of them are in healthcare, a lot are doctors.
Right.
But here's the thing.
Did all the doctors say, oh, of course you have to get tested?
No, everybody has different levels of concern, and everybody there has kids that range in age from 6 months to 3 years old. So it's like everybody has different levels of concern when it comes to how they feel about risk tolerance.
Isn't it interesting that not all doctors necessarily say, okay, of course you have to get tested?
No, and some are saying we're not going to get our kids on a plane yet, whereas others are like, oh yeah, we're ready to fly with our kids.
This is our world, and you can see kind of the back and forth play out in financial markets. And I am curious about what will be the message that Jay Powell and company ultimately, put out for us about when it comes to the variant. Like, should we be cautious, or, hey, folks, it's okay, we can move forward?
That meeting kicks off tomorrow. One thing we can expect to see him talk about and hear from him on Wednesday is the concerns about the Omicron variant and to what extent he thinks and the Fed thinks that it could disrupt things.
One thing we probably won't hear is the word transitory, because we know Jay Powell's like, all right, enough with it, guys. We're done. All right, so let's talk about the latest when it comes to the coronavirus and, of course, the pandemic. I should point out global COVID cases passing 270.2 million, deaths topping 5.3 million, more than 8.45 billion shots have been given out.
270.4 now, because that was a couple hours ago.
Was it? Okay,
Yeah.
so you just got the latest
number.
And I didn't realize, but I had heard in a reminder that we've had more COVID deaths in the United States this year than we did last year, which to me was like shocking.
It's startling, with vaccines available.
All right, so let's get to it. Dr. Michelle Longmire is with us, CEO at Medable. It's a platform connecting patients, sites, and clinical trial teams. She is with us once again on the phone in Palo Alto. Dr. Longmire, nice to have you here with Tim and myself. How are you?
I'm doing fine. I think everyone has top of mind. So thank you so much for this.
You know what? I think we're going to see if we can get a better line on that, and hopefully we can get back to Dr. Longmire, because we know that's a little tough to hear. In the meantime, just going back to our conversation, like, that is our world. And I mean, the same thing with me, someone in my orbit, I'm going to be honest, I was going to get my hair done. I called, a week or so ago, and she's like, I've got COVID. And getting it for the second time, stayed home, quarantined, wrote it out, 10, 11, 12 days, whatever it is, before she could come back. But it's just a reminder that we are increasingly seeing cases, and a lot of them are younger individuals.
Yeah, the disruption continues too, as well, because last week my son's class was closed again for the 3rd time because of a case.
Wow.
This was not a case in a student. It was a case in a student's parent who was fully vaccinated and did not have any symptoms. The kid tested negative.
Right.
But what we had to do was we had to wait for a few days to get our son tested to make sure that potential exposure, enough time had passed between that potential exposure and him getting tested. So that sort of thing, like if school is closed on a Friday, and this is something that Jay Powell has talked about over and over again, and we hear policymakers talking about this, what happens when that school closes? Well, it means that one parent has to stay home from the office. What does that do to productivity? Because, look, everybody who has kids knows that you can't just leave a 3-year-old sitting there while you're doing work, right? No,
Right.
you can't work with a kid right there.
No, it's really, really
You're
difficult.
taking the day off.
Exactly. It definitely impacts things. Lucky for us, our team has gotten Dr. Michelle Longmire. She's Chief Executive Officer of Medible. She's with us on the phone from Palo Alto, California. Hey, Dr. Longmire, so let's talk about, I think it's about a year or so ago that we caught up with you. What's new in your orbit? What lasting changes do you think are going to stay with us post-pandemic as a result?
You know, I think everyone is thinking about not only vaccination, right, but boosters. We definitely are seeing the importance of the booster shots with the Omicron variant. And, you know, I think in our world, where my company takes part in the development of vaccinations, we're just, you know, have a very forward-looking perspective on the importance of, you know, not only the vaccine, the tracing of the variants, and then, of course, the importance of the booster shot.
Help us understand where things could be right now when it comes to vaccines for every American. And again, this is my world, so I'm still waiting for those vaccines to become available for kids under 5 here in the U.S. Help us understand where clinical trials are and where they still need to go.
Yeah, I mean, it's very important in the vaccine strategy that we really canvass, you know, the full population. As we see with the variant, anyone who's not protected with immunity then becomes, you know, a potential source of not only infection and sickness, but also mutation of the virus itself. So, you know, in the vaccine strategy, it's incredibly important that we get to a point where we have the clinical data to offer the vaccination to people of all ages. You know, in parallel, it's very important that people get the vaccination and then follow up with those booster shots, because we're seeing that the immunity offered by the booster shot is likely extremely, you know, important when we look at these variants where the original vaccination was developed against a slightly different strain.
I just got about 40 seconds left here. In terms of clinical trials, are we all kind of in a clinical trial right now by taking that third booster shot when it comes to, we'll see how effective it is against Omicron?
Well, it's an interesting question. Certainly, we are tracking the efficacy of the booster to this variant, and it's something that all vaccine manufacturers and the overall clinical trial industry is looking at, and something we'll continue to track.
All right, we're going to leave it on that note. So glad we were able to connect. Dr. Michelle Longmire, she's Chief Executive Officer at Medible, on the phone from Palo Alto, California. You know, Tim, we know it's just, we got to see how it all plays out, and we'll get a better idea of how effective the boosters are, essentially, or whether or not we're going to need a whole new booster against the strain.
Good question, by the way.
Thank you. You like that?
Yeah.
I was working on it.
I was like, wait a second, we kind of are, aren't we?
No, I mean, we've all
Hey,
been
so far so good.
We've been all part of this grand experiment, like,
Yeah.
you know, working it out together. All right, you're listening to Bloomberg Business Week. Carol Master, Tim Stanovic, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So, got to say, I've been thinking a lot about the people around the country who had to deal with the devastation from that wide swath of tornadoes that went across the country. We know many Americans lost their lives. A really difficult situation and a reminder of how important your cell phone can be, certainly in moments of crises.
And certainly why this column by Spencer Soper, technology and e-commerce reporter, caught my eye. We're going to catch up with him in just a few minutes. Remember, he covers Amazon, so this one all about a facility in Illinois.
Connection lost. Let's get back to your top business headlines and look at the trading day. Here is Charlie Pellet.
Thank you very much. And here's what's going on. Stocks are lower across the board. The Dow, the S&P, NASDAQ, all declining today. We've got more on Amazon coming up, but Amazon shares right now lower by 1.1%. Markets around the globe preparing for a wave of central bank decisions. We'll be hearing from the Federal Reserve on Wednesday. Two-day meeting gets underway tomorrow. The decision will come up on Wednesday. Complete coverage here on Bloomberg Radio. Traders, meanwhile, weighing the potential impacts of less generous monetary settings amid coronavirus challenges and lofty equity valuations. S&P 500 down from a record, dropping 29 points, down 0.6%. The Dow is down 249, down 0.7. NASDAQ down 150, a drop of 1%. 10-year up 17/30. 10-year yield 1.42%. Spot gold up 0.3%, 17.87 the ounce, while West Texas Intermediate crude is down 0.7%, 71.15 a barrel. One person has died from the Omicron variant in the United Kingdom. That, according to Prime Minister Boris Johnson, as demand for booster shots and rapid at-home COVID-19 tests surges in the face of the fast-spreading mutation. Meanwhile, a paper by University of Oxford researchers finds that 2 doses of Pfizer and AstraZeneca's vaccines induce lower levels of antibodies against Omicron. Dr. Joshua Sharfstein is vice dean at the Johns Hopkins Bloomberg School of Public Health.
With each study that comes out suggesting actually good news, which is with 3 shots of the mRNA vaccine.
Pfizer up now by 3.8%. Its German partner BioNTech, its ADRs up 9.1%. AstraZeneca's ADR is up 0.8%. Moderna higher now by 5.6%. J&J Johnson & Johnson up 1.7%. Recapping, stocks lower with the S&P down 27 points, down 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So the nation continuing the damage to really kind of work their way through dealing with the damage and loss caused by that historical and catastrophic group of tornadoes that moved across a broad section of the country this weekend in a swath that at times was as wide as 3/4 of a mile. I mean, I've seen the footage. I've looked at a lot of the coverage. It's just remarkable, Tim, how much and unfortunate how much was impacted as a result.
It included a tragedy at an Amazon warehouse. And on Saturday night, this story caught my eye. It was by our own Spencer Soper, technology and e-commerce reporter for Bloomberg News. He joins us now on the phone from Seattle. Spencer, before seeing this story, I didn't know that Amazon had any sort of policy when it came to having phones on people who work in these fulfillment centers. Bring us up to speed on why now the deadly collapse at this Amazon warehouse is putting the spotlight on the phone ban.
Okay, yeah, so the phone ban goes back years. And before the pandemic hit, employees would be required to leave their phones in their cars or leave them in lockers at the facilities, before checking in and going through security. And Amazon relaxed those rules, because of the pandemic and just the need for people to see alerts and keep in contact with loved ones and that sort of thing. And then, Amazon's been hinting this year that they would return to this phone ban potentially at the turn of the year, and some places were actually, some facilities were actually returning to it a little bit earlier than that, just kind of feeling employees out on how they'd react. And so obviously after this tornado hits, people are, very keen to have their phones with them. It's something that I think many workers want anyway for a variety of reasons. You have kids in daycare or school, you have loved ones who have an emergency and might need to contact you. But this tornado that collapsed a facility in Illinois and killed 6 people, it just really reinvigorated this conversation.
It made me think too, Spencer, that I think years ago there was a point where if you had a cell phone, you wouldn't just pull it out in a meeting and look at what was on it, or excuse yourself from a conference room meeting to take a call. And things have certainly changed in offices where I see people, I've done it. It's just we've moved to a different level. You have your phone on with you at all times. But in warehouses and factories and distribution centers, it's a realization that that's not necessarily the case for a lot of workers.
Yeah, and there has to be some differentiation, right? There's a difference between having a device in your pocket that can alert you to an emergency, and there's also a danger of wandering an industrial work area with your phone in front of you watching Instagram or TikTok. So they definitely need rules around these things. But I think a lot of employees, and particularly with a company like Amazon, which wants to deliver, wants to put customers first, there's not a lot of trust. You're in this huge facility. There, you likely don't have access to a window or anything, or can't see what's going on outside. People would prefer to have access to information about extreme weather events themselves without having to go through some kind of Amazon filter and without being isolated from it.
Right. I think about how many times we've been I know we've been in a newsroom, right, Tim?
Yeah.
And all of a sudden your phone goes off on some kind of weather alert or some concerns.
Yeah. Hey, Spencer, I'm wondering if this ban, if it goes to smartwatches as well, because one thing anecdotally that I've noticed, especially for people who work in situations where they're not really supposed to have their phones on them, is that they've resorted to smartwatches. And increasingly we've seen smartwatches be able to connect on their own to cellular, right? You don't need to have Wi-Fi for it. Are those banned as well, or were those banned during the ban?
I'm not clear about that, but definitely there have been a lot of people talking about investing in those devices, where Amazon employees, if this ban is to come back. And so, yeah, I imagine it could be a tricky thing to enforce.
So is Amazon going to do anything differently?
No idea. I'm trying to hear more from them. Last I saw was that this ban would come back into effect in December, but with the COVID and new variants emerging, who knows if that gets kicked down the line again, and who knows if this is the kind of incident that gets them to rethink it entirely. Because there are also some some workplace shootings and things. There was a big shooting in a FedEx facility recently that got them talking about cell phones as well. So this is the kind of event that could encourage an employer to do things differently.
What about other employers? Do we know? Yeah.
I didn't do a survey of every employer in the country, but there are places that don't allow them. But also, like I said, there's a difference between having a phone with you at work and having your phone out in front of you and not paying attention when it's a safety risk. So I think that's the conversation that's going to be happening now. And companies also may ban them to protect sensitive information, that sort of thing. So there's just all kinds of layers and reasons to do things. But in this particular situation, employees are saying, you know what, these devices can be lifesavers. I want to have it with me.
Hey, Spencer, just in the last 30 seconds that we have with you, right before you came on, you published a story about that the warehouse collapse is being investigated by OSHA. What are we looking for? What are you following here?
Well, it's pretty expected that OSHA will investigate. We had 6 people die at a workplace. And they have up to 6 months. So I imagine they're just going to try to see what kind of safety protocols they had in place and that sort of thing. Was Amazon doing drills for this type of behavior? But again, OSHA's rules are pretty soft. A lot of things that they do who are just recommendations, and so there's no penalty for not doing them. So I am kind of curious to see what OSHA digs up.
All right, Spencer, thank you so much. Bloomberg News technology and e-commerce reporter Spencer Soper, that is, joining us from our Seattle bureau. All right, coming up next, we're going to talk about a restaurant that figured out its way through the pandemic and came out actually stronger on the other side. That's coming up next. You're listening to Bloomberg Business Week, and this is Bloomberg Radio. All right, you are listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. So the Penn Station, New York City's unloved Penn Station.
Unloved is right.
When I was just out of college and I was commuting from my parents at home and would come through Penn Station a lot, it's a rough place, man. And it was then, and it still is.
I haven't been to the newly redesigned.
I haven't been there either, which I hear is gorgeous.
I hear it is as well. And that's perhaps why we're talking about this story. New York City's unloved Penn Station spurs unlikely plea for preservation. So in November, as one of her first major acts since taking office, New York's Governor Kathy Hochul pared back development plans for New York's Penn Station set in place by her predecessor, disgraced former Governor Andrew Cuomo.
Now, the Cuomo plan would have greatly expanded Penn Station and upscaled the neighborhood. Hochul's vision narrows the scope of work. It still stands to dramatically transform the subterranean transportation hub, which has been the focus of various unrealized redesigned dreams for decades. There is something about, and I'll be quite honest, if I've had to go there, I try to stay outside as much as possible and then just go in at the last minute. If you've taken a train to Amtrak, right?
Yeah.
An Amtrak train, it's just, you feel like you're in another world.
Okay, so that's perhaps why people are so surprised that at the 11th hour, New York preservationists decided to go for the nuclear option to make a last stand. New York State's Historic Preservation Office has said that to Penn Plaza, that's MSG and Penn Station, the dank, dark, dim, dismal, depressing, and dangerous Penn Station should be added to the National Register of Historic Places.
Wait, what?
Yeah, exactly.
Well, so we'll have to see what happens here. And it is interesting to see how, as our writer Kristen Capps writes, it's kind of come full circle. There was one time to kind of get rid of everything, and so here it is. I think most people would argue, all right, let's preserve it, but let's try and maybe bring it back to its once glory.
There's a lot of dank, dark words there describing it, right?
I mean, truth be told, you go down there and you feel like, will I ever come out? All right, you're listening to Bloomberg Business Week. Lots more to come. We're going to talk about the restaurant scene in New York in just a moment.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks lower in a key week for global rate decisions. We hear from the Federal Reserve Wednesday, but also this week, the ECB, Bank of England, and Bank of Japan will also be delivering policy decisions. Stocks lower. Right now, the S&P is down 28, retreating from a record, down 0.6%. We've got the Dow down 253, a drop of 0.7%. NASDAQ down 147, a drop there of 0.9%. Economists are expecting the Federal Reserve to accelerate its taper while quickening hikes. 10-year yield again, 1.42%. Spot gold up 0.3%, $17.87 for an ounce of gold. Bitcoin continues its slump, now down 7.3% to 46,352 on Bitcoin. And West Texas Intermediate crude down 0.7%, $71.20 a barrel. Pfizer has agreed to buy Arena Pharmaceuticals in a deal valued at about $6.7 billion. Pfizer shares, they're up 4.1%, while Arena is surging now by 80.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, and you are up to date. All right, Charlie, thank you so much. Well, it's not been easy running a restaurant during COVID. We all know that, right? But for one dining establishment in New York City, surviving COVID took it to becoming more profitable than ever. Tim, it's a great story.
It is a great story. And it's right, Joshua Brustein, technology editor for Bloomberg Business Week. Joshua's story is featured in the upcoming issue of Bloomberg Business Week magazine. You can read it now on the Bloomberg and at Bloomberg.com/businessweek. Joshua joins us now. Also joining us is Joel Weber, editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studio as well. $25 an hour minimum wage, no outdoor seating, no tipping. The list of things that makes dirt candy in the Lower East Side unique, Joel, it continues to go on.
Well, the outdoor seating is actually part of that story, because when Josh first pitched this story, it was sort of like, look, like every restaurant, especially New York, like kind of the kingdom of restaurants, is going through something right now, and can we use dirt candy as a vehicle to basically ride along and see what this is like for chefs, the employees, everything, and it ended up being sort of this amazing look under the hood, in the kitchen, on the countertop, etc. As Josh followed it for months, and you know, I think that outdoor seating thing is part of it, and it's the opening anecdote, which is like a lot of these restaurants have those sheds. They came in handy for a while, and even when it's cold like now and nobody's really using them, although maybe starting to trickle through, you can't quite bear to tear them down yet. And what's amazing about the story is, you know, that sort of is an embodiment of it, but there have been many things that have pushed restaurants as entrepreneurs and these chefs to like come up with a new way of doing things, and believe it or not, despite everything, dirt candy is more profitable than ever. How have they done it, Josh?
Yeah, I mean, it's interesting because, as you said, dirt candy did a couple of things that would seem to make it harder to be more profitable. It raised wages, which were already pretty high for a restaurant. It was paying $18 an hour before the pandemic, and then had to lay off its entire staff in March 2020. And when they reopened in May of this year, they came back with $25 for the opening wage, including health benefits, which is pretty much unheard of in the restaurant industry. That ended up being an advantage for one of the key challenges that restaurants are having right now, which is hiring people. And the other thing,
it was also an advantage when they were laid off, right?
Yeah, absolutely. When they laid people off in 2020, because their wages were higher, the employees got higher unemployment checks, which, you know, wasn't a direct benefit to the restaurant, but did make everyone feel a little bit better about what was, you know, an unbelievably bad situation.
I was particularly surprised, though, that even with all those great benefits that you don't typically associate with a job at a restaurant, she still had a really hard time getting people back to work.
Yeah.
Like, did you say 2 out of the 40 people? Am I getting that stat right?
That's about right. I think they had 35 people before the pandemic. They laid off about 30 of them and made this offer when they were going to rehire. Hey, you can all come back. We're going to give you these big raises. You'll be able to buy into health insurance. And only 2 people came back, which I think really is a testimony to how much people in the restaurant industry just don't stick around anywhere very long. If you let someone in your restaurant like leave at the end of the shift, Amanda was saying, like, chances are that they might not come back. So there's just a lot of movement. One thing she was able to do was get new people in the door faster than I think some of her competitors were, just because you pay people more money, they're more likely to show up.
So actually, let's just talk about Dirt Candy in a bigger sense, which is this is a revered restaurant among vegetarians, right? So what has she done with the menu during this time?
Yeah, so one thing that she did with the menu, and this was something that Amanda said was difficult for her to stomach, basically, was she really pared it down, she simplified it. Dirt Candy's a tasting menu, which means that you can only order one thing. It's a 5-course tasting menu. She used to have multiple tasting menus, but now you go in and it's basically, as she put it, it's kind of like an admission. You pay the $85 and you get dinner. And it's a great dinner. You're not going to get to choose. You're not going to be able to substitute things. And that does a couple of things. It allows her to cut way back on food waste because she's able to meticulously plan how much she's going to need. And I was surprised at how much of a difference that makes in just the economics of a restaurant. The other thing it does is restaurants have a problem typically where if they raise prices, people order less. If you go in and the entrees cost more, maybe you just don't order appetizers. But if it's a tasting menu, you're kind of going in and you're either in or you're out. And so that for her has worked.
Can I just say, she got rid of tipping, which I talk about a lot because I've just gotten to a point where I'm very happy to tip people, but there's tip jars everywhere. And when it comes to the restaurant space in particular, I think let's pay people a real wage.
Which is an experiment that New York has flirted with before, right? So the fact that we've had ebbs and flows and now it's back to somebody leaning into a different model, right?
Yeah, absolutely. I mean, this was a previous question about restaurant labor. Amanda was an early pioneer in going for a service fee instead of tipping, and a lot of people who tried this, other upscale dining establishments, gave up on it. But she stuck with it, even though she said it wasn't very good for her business for quite some time. But I think it earns her some reputation, and it does kind of add to the just the aura of the restaurant, which is how you get people in the door to a certain extent.
So is she able to make this work? Because part of your story dives into the idea that she's only been able to make this work through consulting fees. And indeed, one time when you were in there talking to her, she was actually working on a consulting project, I think building a menu for a university. Can she make this work?
Yeah, so that anecdote was about halfway through my time there. I started spending time there in the spring. And by
Joshua, you've been living there, and you've just been eating there. You can be, come on, you're around.
I'll tell you, everyone had the same question for the story: was when are you going to take me to the restaurant?
Exactly. Anyway, forgive me. Go ahead.
And so at that point, she was saying it's really tough. And by the fall, she was like, all of a sudden things are working better. I'm able to cut down. She was cutting down on labor costs, even though wages were up because she employed fewer people. Same with food. Prices were up, but the quantity of food she was using was less. And she raised her prices, and everyone's been stuck inside and really wants to go to a restaurant, so demand was way up.
So what are the remaining challenges that she's sort of obsessed with as we're looking at Omicron, 2022, et cetera? What are the things on the horizon that she's still stressed about?
I just got about 30 seconds.
Yeah, I think the main thing with restaurants is uncertainty. Who knows what's going to happen with the next wave of the pandemic? That's why, Joel, as you alluded to, she's doesn't really like the dining shed, but she won't tear it down because who knows what's coming next.
I like the dining sheds. I don't know about
Insurance policy.
Right?
even in December, January?
I just think they're great. I really like them. All right. Thank you so much. And maybe in the new year, you'll take us to this restaurant.
All of you are invited.
Okay.
All right.
We're going to hold you to it. Joshua Brustein, he's technology editor at Bloomberg Business Week, here in our interactive broker studio, along with Jill Weber, editor of Bloomberg Business Week. Check out this story in the upcoming issue of Bloomberg Business Week magazine. It'll be on newsstands, online, and, of course, on the Bloomberg terminal. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. Coming up, we're going to count you down to the close. This is Bloomberg Radio.
the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left here in the trading session on this Monday afternoon. Romaine Bostick, Taylor Riggs, Kaylee Lyons in for Caroline Hyde today. We're joined right now by our colleagues Carol Massar and Tim Stenovic. We together welcome in full our Bloomberg audiences across TV, radio, and YouTube. Carol, you tell me what you're looking at this week, because we're coming off a historic week last week where we had that big inflation print. You got a PPI print coming tomorrow morning that's looking like it's also going to be big. And you got all the major central banks, Europe, Japan, and of course the U.S., all set to make decisions this week.
20 and counting, so it'll be interesting to see how each of these different central bankers around the world, how they view the outlook in the economy, what they need to do to take care of things domestically. I'm focused on the Federal Reserve, kicking off that two-day meeting tomorrow. What they have to say, do they remain kind of the same message that we got from the last meeting? Do they become more hawkish? Do they ease off a little bit because of Omicron? That's what I'm waiting to see, guys.
Yeah, that's certainly what I'm keeping an eye on as well as we look longer term. But in the more immediate, Romaine, I'm keeping an eye on travel stocks today as we do continue to get Omicron headlines from the United States and around the world. It's sending shares of travel companies lower, cruise lines lower. It's a story that we've seen play out before.
And when you take a look at the broader market here, it is a lot of those travel stocks as well as some of the tech stocks weighing on the broader market. The Dow is in the red here. The S&P, which of course closed at a record high on Friday, down 0.5%. The NASDAQ composite right now down 0.8%. And we know from last week, the Russell 2000, that was a big underperformer. No real love out there right now, Kaylee, for some of those smaller cyclical names.
Yeah, no real love for the cyclical names when it comes to the large caps either. When you look at the breakdown on an industry group level, it is some of the cyclicals that are underperforming, the likes of energy and the banks. The biggest underperformer actually is autos, the likes of GM, Ford, Tesla, all down at least 4% today. What's interesting also is that you're seeing really a tilt into the defensive. Some of those bond proxies, real estate and utilities are outperforming, but also just some of those classic kind of safety sectors, consumer staples and healthcare are also doing well today, Romaine.
Johnson & Johnson, Pfizer, Bristol Myers Squibb, all higher here on the day. Moderna also up about 6% here on the day as some people gravitate back to some of those COVID plays travel stocks, which, Tim, you were just mentioning. Carnival Corp down about 4.5%. And how about AMC down 15% here on the day? Look, nobody's going back to the movies. I mean, that's really the message here. The highest grossing movie that we had this weekend was the big West Side Story remake by Steven Spielberg. That brought in $10 million. That's it. And all told, the top 10 movies that we had this weekend only brought in $40 million at the box office. This is a big issue going forward for a lot of these names. And of course, we remain on Apple Watch. Carol, I know you've had your eyes all over this. It's not going to hit that $3 trillion. Doesn't look like it today.
No, 2.929 is what we're seeing right now in terms of trillions of dollars. So yeah, they keep, continue to grind higher. This is a stock that's up 34% this year, but not going to make it today. Safe to say, investors at this point, why not take a breather? I mean, we had a blockbuster week when it came to the equity trade last week. So we're going to wait to see what the Fed has to say about the outlook and any concerns that they have. If they become more dovish, Taylor, we got to watch the yield curve, because already we're seeing yields back down today.
It is pretty incredible, a 77 basis point spread on the 2s10s. We've talked a lot about equity vol coming down just a little bit, bond volatility that had been rising but coming down just a little bit. And then there is FX volatility, which really, Carol, as we kicked off this segment, really talking about all the big global central bank decisions. The focus, of course, here on the Federal Reserve. We're looking cross-asset, and all of these different FX pairs are really starting to see just a little bit of volatilities. We're trying to figure out here how we react to rising inflation that is a global story.
Exactly, and I do wonder what word we're going to be obsessing on by Jay Powell and company. We had Mohamed El-Arian, of course, Bloomberg opinion contributor. He's also a chief economic advisor to Allianz. He was on Face the Nation on CBS over the weekend, and he had something very specific to say about the word transitory. Check it out.
The characterization of inflation as transitory is probably the worst inflation call in the history of the Federal Reserve. And it results in a high probability of a policy mistake. So the Fed must quickly, starting this week, regain control of the inflation narrative and regain its own credibility. Otherwise, it will become a driver of higher inflationary expectation that feed onto themselves.
All right, of course, that's Mohamed El-Arian, Bloomberg opinion contributor, chief economic advisor over at Allianz. I think it's safe to say, guys, and Tim, that Jay Powell already started to work on that word transitory by dropping it at the last Fed meeting, and not the Fed meeting, actually, at some of the testimony.
And then retired it altogether.
Exactly.
Right.
So in terms of thinking about the reputation or the use of it, he's already been working on that.
So perhaps persistent could be a word that we hear more so. But, I got to tell you that one area of that conversation that we heard from El-Arian just now that I really latched onto was the idea of inflation expectations, because expectations for consumers are very important. If consumers expect inflation to increase or at least be persistent, they could actually buy stuff right now and they could increase demand right now. And what that does is that actually increases inflation, and then they can go ask for raises and they can try to get and get paid more. And that creates this potentially sort of spiral, and that's what they need to avoid.
But there's no potential here. I mean, the policy mistake has been made. We're already seeing this in the data. We're seeing this in the own Fed surveys, whether it's the New York Fed survey that Taylor, you flagged earlier this morning, or whether the Beige Book stuff. I mean, the inflationary pressures, whether I don't care how you want to measure them, on the ground for real people, not rich people trading in the markets, it's being felt here, and they're already adjusting their behavior.
Yeah, I know we focus so much on core CPI, that was the print on Friday, but also food and energy cost is what consumers are facing at the pump and at the grocery store and can actually affect their behavior. And to your point, Romaine, I think the Fed is aware of this, which is why we've seen them so clearly forecasting they're going to accelerate the pace of the tapering.
Do you know how much it cost me to fill up the Maybach this morning?
I'm not even sure I want to know.
Wait, do you even fill up?
Romaine?
Do you even fill it up, or do you have somebody do it for you?
I'm a man of the people, Carol.
Oh, yeah.
I pump my own gas. I'm not
Well,
like
let's talk
I'm not
about-
like you Jersey people who don't have to ever get out
Never
and pump
pumped
your gas.
Just because we
She's
know how to
never
do
pumped
it,
gas
I'm
in her
just
life.
gonna say.
Let's talk about if those inflation expectations are anchored. When you have that New York Fed survey that says a one-year head expected gas price rise 9%, rented gains now in the next year 10%, Romaine.
And we talk about gas, you have to talk about food, and it's always funny because, these are, of course, the things everyone strips out. But you strip out those core, I mean, take a look at when we get PPI tomorrow morning. You strip out gas, energy, you strip out food, you strip out trade service, the most volatile elements of that, you're still talking about 6-7% growth in that core number that people are looking at. So no matter how you slice and dice this, the inflation's there, it's real, and it's significant.
Well, we have to remember that the Fed has a dual mandate, right? So it's watching the employment picture, it's also watching inflation, and safe to say that they did not want to do anything to slow workers getting back to work, right? And so maybe they overdid it. I think for years we're going to analyze in terms of Fed policy, and I think there's some concerns about also going too aggressive and making a mistake into the new year.
And can I just, just to interject here again, we're getting a red headline crossing the Bloomberg terminal, and this is on COVID cases, and not to alarm anybody, but
Why are
the
we
latest,
still doing cases?
Right, that we're still doing cases, but it brings up the idea of sentiment here. The headline is, for those who want to know, Taylor, is U.S. COVID-19 cases surpassed 50 million. This is based on Johns Hopkins data. And I only bring that up because when you talk about what's going to happen in that room on Tuesday and Wednesday at the Fed here, they're going to talk about inflation, but they also have to talk about COVID and how it sort of affects the economy.
Yeah, absolutely. And there's other headlines coming out, like New York is reporting rising deaths and rising cases as well. So it also is that death and hospitalization number we have to factor in here. But the question is, if the economy is not shutting down, does that move the needle for the Federal Reserve, or do they react to inflation and a hot labor market first?
But do you have to have a full shutdown to have an economic impact? If you don't have people going to offices, they're not buying lunches, they're not shopping, and so there is definitely an economic impact. We're going to continue this conversation. That does it for now, though, folks. We'll be back on radio, on TV for Beyond the Bell. Our cross-platform coverage will continue when we take you through today's market close on this Monday.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week, and we're going to join our TV team again as we get close to him, and we'll get some clarification certainly on Wednesday, but it's still a tricky time in terms of Fed policy.
Okay, so
I will put that out there.
Right, so everyone listening just heard from Mohamed El-Arian, and I'm wondering, Carol, how does the Fed regain control of the narrative here?
Well, I don't think they've ever lost control of the narrative. I think, if anything, Jay Powell has learned from his, first day where he did make some missteps. I think they've been very clear in putting, their intentions out there, signaling to the markets. We really haven't had any taper tantrums, to be quite honest with you. They do have a dual mandate. They've got to get, workers back in order for the economy to be back on track. how you could figure out the economy was going to shut down completely, and then we were going to have these supply-demand disruptions. Nobody predicted it, to be quite fair, and the Fed had to manage their way through. They cannot deal with that supply-demand imbalances. Certainly they can deal with the cost of money and money floating out in financial markets, but I think it's a tricky time, and certainly our economic history, to say the least.
Absolutely a tricky time, and I don't envy Fed Chair Powell in the position that he actually has. What about the idea of the word credibility? Because that came up in our conversation as well. And
do you think he's lost credibility?
Well, I don't think he's lost credibility, but I also am wondering about the political element to this, because it's absolutely turned political. We're about to be in a year that is a midterm election, and there are lots of conversations, especially on the Republican side, about Democrats causing this. And look, you talked about the global element here, right?
Right.
The idea that we have 20 different policy meetings that we're
And there are
tracking
other
this
countries
week.
that have global supply-demand imbalances, not just the United States.
But
so let's be
don't let that
smart
get in the
about
way of a
this
good
when we
narrative,
look at it.
right?
Right. And it's politics.
And it's politics, exactly. So I'm wondering, from the credibility side, at least politically, how Democrats are able to regain the narrative there.
Yeah, I guess so. What I'm hoping is that, and we've seen, some flattening of the yield curve over the past couple of weeks, and I do wonder, it is just a difficult time, I think, in terms of calling policy or making decisions. We talk about it with economists and making those calls, and so I am very curious.
Because there's no playbook, right?
There isn't a playbook, and it was so dramatic, the drop-off, and so dramatic the bounce back. And so I am curious to see what is the tone, the tenor, and how much outlook and visibility Jay Powell and company feel like they could share with us. I'm just going to say that.
Yeah, we'll find out on Wednesday, right?
Yeah, we will, indeed. All right, you're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic on Bloomberg Radio. All right, you are listening to Bloomberg Business Week, and so watching the markets, counting down to the Fed, a lot going on. We're also checking out always the latest tweets from none other than Elon Musk, because he's been pretty busy. In the meantime, I feel like we haven't gone through either days or weeks where there isn't some major conversation around Elon Musk, specifically the individual or one of the companies that he's involved in. And as a result, he is Times Person of the Year for 2021.
Did you see this coming?
No, I didn't. I hadn't really thought about it.
I thought they'd continue with something pandemic related. To be honest, I was surprised that it was somebody who's, really not related at all to the pandemic that we've seen, in the sense of, yes, early on in the pandemic, he talked about providing ventilators to different parts of the country and different parts of the world. But yeah, I was particularly surprised to see this. Time Magazine has named Elon Musk, who, by the way, doesn't just run Tesla, runs SpaceX as well, Person of the Year. They called him, quote, the man who aspires to save our planet and get us a new one to inhabit.
Here's what I would say, and it's interesting, too. There's been a lot of coverage about the next, I forget what they're calling it.
The Starship?
Yes.
Yeah.
That's going up there and really giving us,
huge.
It's fantastic, and there's been some great stories out there that's really going to be able to get us close to the black hole like we've never before, and really understand the origins of our universe.
Don't get too close to it.
I know. Well, and they've got this incredible shield, because it's going to be hot on one side, cold on the other. But Elon Musk is someone who, speaking of narratives, change the narrative when it comes to electric vehicles and how quickly you could do them. If you think about the role he has had in getting the traditional establishment auto industry globally, awaken them, and all of a sudden the timetables have moved up dramatically.
Right. Would Ford
That's
and GM and companies around the world be doing the shift to electric without Elon Musk spurring it?
And figuring out new models and ways of doing it. Whether you like him or not, he certainly has disrupted the creation of how you make and sell automobiles, and really the EV space. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are lower across the board with the Dow, the S&P, NASDAQ all slumping. 43 minutes to go ahead of the closing bell. Let's get right over to the first word breaking news desk for today's afternoon call. Here's Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks are trading lower ahead of a wave of central bank decisions this week. The Dow is down 210 points, S&P drops 25, and the NASDAQ is down 115 points. The U.S. 10-year yield is at 1.42%, and small caps are lower by 10. 7 of the 11 main S&P sectors are trading lower, led by losses in energy and consumer discretionary, while real estate and utilities are leading to the upside. NASDAQ biotechs rise 80 points, transports fall 130, semis drop 65 points, while the VIX is higher by 6%. Leaders in the Dow, Coca-Cola, J&J, and Procter & Gamble, while Boeing, Home Depot, and Dow are the worst performers. Airlines and cruise stocks slumped amid fresh COVID fears, while Moderna led vaccine makers higher. In deal news, Harley-Davidson gained on plans to take its electric motorcycle unit public via SPAC, and Pfizer struck a deal to buy Arena Pharma for $6.7 billion. Wrapping things up, Bristol-Myers rallied after raising its dividend and approving a $15 billion buyback, and Tesla is on pace for its lowest close since October. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey, and to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much. Well, this story is today's Bloomberg Big Take. It's pretty incredible. The question on everyone's mind, what could possibly go wrong with our global economic outlook? Our Bloomberg economics team with the biggest economic risks for 2022, and here to tell us about them, and there are quite a few, is Bloomberg Economics Chief Economist Tom Orlik. He joins us on the phone from Washington. Hey, Tom, good to have you here with Tim and myself. So this story, pretty incredible. There is quite a bunch of things that could go wrong in 2022. Is that fair?
Well, I think if we look back at the experience of the last 2 years, Carol, a lot has gone wrong, right? From the virus to inflation to flaring geopolitical tensions. And I think for economists, that means we just have to be a bit humble about our capacity to look into the future and pay much more attention to the risks. So looking into 2022, that means thinking about Omicron. It means thinking about what happens if inflation stays high. Can markets sustain a tightening Fed? And of course, geopolitical tensions from Russia, Ukraine to Taiwan to elections everywhere from France to Brazil.
Tom, is it fair to say the biggest risk out of all those is potentially new variants in Omicron?
Yeah, that's right. And we're seeing some of the consequences of that already with the UK encouraging people to work from home, new mask restrictions in other parts of the world. I think it's important to keep in mind, though, that there is a Goldilocks scenario for Omicron. If it turns out to be really contagious, but not very deadly, then the world could get a low-cost inoculation.
Yeah.
And that could be a trigger for things to get back to some version of pre-pandemic normal.
This is exactly what we talked about last Friday with Dr. Ian Lustbader from NYU Langone. The idea that if this is potentially, spreads more easily, but it is less deadly and doesn't make us sick, then it could be okay. We just don't know that yet, though.
Yeah, it's still just too early to say. And right now, of course, you hear the words new variant and immediately people's minds go to the worst case scenarios. If this does turn out to be like Delta or even worse than Delta, and we go into lockdowns again in the first part of 2022 and supply chains snarl up again, we're looking at lower growth, we're looking at higher inflation. That's a very challenging environment, one where the Fed, the ECB will not have easy answers. But at this point, it's really too early to make a definitive judgment. And there is that sort of tantalizing possibility that this could be more contagious, less deadly, and so actually part of the end game and the return to normal.
Hey, Tom, how did you guys kind of theorize around all the central banks? We know we've got, 20 plus or so making moves or decisions this week. What we might see in terms of maybe not coordinated central bank policies around the globe and how that disconnect the problems that could potentially cause.
So I think one of the intriguing things looking into 2022, Carol, is actually we're going to have divergent policies for some of the world's biggest central banks. The Fed, we think, is now barreling towards an accelerated taper, opening the path potentially to a first rate hike as early as March next year. Now, historically, the People's Bank of China followed the Fed. If the Fed started hiking, the PBOC started hiking, and that was important for China and for the rest of Asia. In 2022, for the first time, we think they might move in opposite directions. The Fed starts to hike, combating inflation. China is more worried about stress from Evergrande and the real estate slump, and that pushes the People's Bank of China to start adding stimulus. If you've got the two of the world's biggest central banks moving in opposite directions, that's going to introduce some interesting dynamics into markets, into currencies, into economic trajectories.
Yeah, I think it'll be interesting. I agree with you. Like the two behemoths when it comes to central banks and their, varying policies. What else, Tom, is on your radar?
So geopolitics looms large, Carol. We've got all of the tensions between Russia and Ukraine, and of course, Europe, where energy prices are already high and inflation is already high, relies on Russia for a lot of its energy imports. If Russia-Ukraine bubbles over into something that looks like conflict and that gas pipeline gets turned off, well, that's bad news for Europe, bad news for the ECB and the Bank of England as they try and combat inflation. Taiwan is a risk near the top of many people's worry list. In a worst-case scenario, you get a conflict which draws in the world's two biggest powers, China and the United States. But even something which stops short of that could be a blow for semiconductor production, and we saw how bad that can be this year.
By the way, there is some stuff about what could go right in 2022 in here as well, so check it out on the Bloomberg terminal.
You are always the glass half full. I love that about you. Tom Orlik, Chief Economist at Bloomberg Economics, on the phone from Washington, D.C. You're listening to Bloomberg Business Week. Chart of the day coming up next.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Monday. It's a big week. Obviously, the Fed meeting. We'll get that decision on Wednesday.
It's only Monday, Carol.
It's only Monday. Can we start that?
I don't know.
You did. I love it. I love it. All right, we're going to get to the chart of the day with Creedy in just a moment. First up, though.
Let's get a check of the trading day. Here's Charlie Powell.
Hi, thank you very much. And here's what's going on. Markets around the globe preparing for a wave of central bank decisions. As you mentioned, Fed Day will be Wednesday. Policymakers begin their two-day meeting tomorrow, and economists do expect the Federal Reserve to accelerate its taper and quicken its rate increases. Right now, we've got the 10-year yielding 1.42%. Stocks are lower across the board. They've been that way since the open, with the S&P now down 27 points, down 0.6%. The Dow is down 214, also down 0.6%, while NASDAQ is tumbling 143 points, down by 0.9%. Spot gold up 0.3%, 17.88 the ounce, while Bitcoin is down 6.5%, 46,675 right now on Bitcoin, and West Texas Intermediate crude is down 0.4%, 71.36 a barrel. U.S. COVID-19 cases have now surpassed 50 million. This according to Johns Hopkins data. Meanwhile, a paper by University of Oxford researchers found that 2 doses of Pfizer and AstraZeneca's vaccines induced lower levels of antibodies against Omicron. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
I think that companies are looking at the data just like public health officials are looking at the data, and it wouldn't surprise me if they start requiring the third shot. I mean, the third shot is very safe, and it protects against Omicron, so it's pretty logical that we could get there.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we follow on a regular basis, they're making big gains today. Pfizer, for example, up 4.2%. Its German partner BioNTech, its ADR is up by 8%. AstraZeneca's ADR is up 1.2%. Moderna, based in Cambridge, Massachusetts, up 6%. J&J, Johnson & Johnson up now by 2%. Recapping, stocks lower with the S&P down 25, down 0.5, and that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, it is 3:33 on Wall Street. It's time for us to get to Creedy Gupta, Bloomberg Markets correspondent for Bloomberg News. She's with us in the Bloomberg Interactive Broker Studio, and she's got her chart of the day.
Chart of the day. Well, for today's chart of the day, we cross the Atlantic and we take a little trip, and we go
Not
to,
really.
Sort of.
Did you not hear about what's going on in the world?
A metaphorical trip, a fantasy trip
in the metaverse,
to the United Kingdom. Oh, don't start.
All right.
We're going to London here. The Bank of England in particular, which I should mention is actually very close physically to the Bloomberg office there. Fun fact. Well, this week is Central Bank Palooza, and that is what my chart is really about, specifically the Bank of England, because they have done something kind of wonky. It's driving every pound sterling trader crazy, as far as I know. Essentially what they said a couple weeks ago, a month ago, was that they were looking to target inflation. Now, they have a very different inflation problem than we have, in that inflation in the UK is double the Bank of England's target. So they are very actively talking about targeting inflation, starting to taper their bond purchases, and they started making those comments way before any other central bank in the world did, which was a really kind of crazy idea, because I think this was a couple months ago when they started to talk about this, and we were all like, but we're still dealing with stimulus and we're still recovering, and what is this going on? And then they took kind of a U-turn, and it's happened in the last couple of months with the Omicron variant, and especially in the last couple of weeks when you started to see variant cases actually sped by about 3,000, I believe, the health secretary said this morning. So my chart is really talking about the volatility that you're seeing in the pound as a result, because the BOE has obviously a more extreme problem than perhaps some of the other central banks do, but it's kind of the same thing in that they're trying to deal with the variant while also dealing with inflation at the same time, and that is quite literally the difference between a rate hike and not doing anything at all? And how do you price something like that when it could go pretty much either way? And that's the problem. But I wanted to put it into perspective here. So my chart was actually a trade-weighted pound trading at, really since Brexit happened, in a very small range for the past 5 years until this year, when they're trading in an even tighter range at the top of their original range. And I really recommend for you guys on radio who can't see the chart to find it on Twitter or find it on the terminal, because
but
it's quite the
basically,
visual.
like you said, tight range, kind of moving within that range, and then all of a sudden it goes to the top of that range,
and just stays there.
And it stays there in its own little tiny band.
Right, which is kind of wild because this is happening at the same time as a lot of those trade flows aren't actually hitting the UK. So
forgive me, why do I care? Tell me why this is significant.
Yeah, well, here's why. So it's all about the trade flows, right? I love to come on this program and say it's all about the growth. Forget what the markets are doing. Is the economy growing? Yes. Are the assets rallying? Is the economy growing? No. Then why are they not falling, right? And right now, the economy in the United Kingdom, it isn't actually churning out a ton right now. A lot of London used to be this huge historical maritime city, and a lot of those flows just aren't going through London anymore.
Is that because of Brexit, or
because of Brexit, because of oil, because of, there's so many reasons, but in particular, Brexit's a great point. This is why I made Brexit kind of my timetable here, because since those Brexit border controls have been really kicked in, a lot of the cargo now goes to Ireland and then the European Union, and that really harms the UK in particular. So that's kind of what my chart shows. So the question to why do we care? I feel like the Bank of England is a really great case study for the Federal Reserve. And of course, we're going to hear from the Fed first this Wednesday, but it really brings to the question, is central bank policy driving asset prices, which they are very clearly, but is that more important than trade flows or supply chain issues, which really have kind of been on the back burner? Even things like tariffs, which, by the way, are still on China from the Trump era. They haven't actually been removed, and yet they're all kind of in the background because central banks are so front and center right now.
Yeah, they definitely are. They are driving the conversation, and it's going to be what we talk about until we get through the Wednesday meeting, Tim.
Absolutely.
Yeah, it absolutely is. And don't forget, we do have special coverage of the Fed decision coming on Wednesday, starting at 2 p.m.
All right, so what else has caught your eye today?
I loved the story from our very own Sean Donnan over in Washington.
Love Sean.
He is
who follows all things trade.
He does. He's so freaking smart. It's really annoying because I have to read all of his stuff. And it's so smart and so good. Anyway, so I really recommend you guys read the story. He wrote it on Friday and it got published. But really, he's making the title of his story, I'll say, kind of has everything to do with what the topic is. Washington has learned the real lesson of the China shock. And by China shock, he's talking about essentially China joining the World Trade Organization, becoming a bigger part of the global economy. And a big chunk of that has been kind of jobs and job creation that has actually moved over to China, or business that's moved over to China. And one of the kind of key pieces of his piece that really stuck out to me was what he talked about, what comes next when we're talking about supply chain issues or other shocks in the future. And he says, obviously, we're talking about the EV situation. It's very relevant when it comes to China. He says, for every new electric vehicle battery plant that opens, there's a combustion engine factory that's doomed to close. One community wins while another loses. And in his point in saying that, and this, of course, he's quoting an economist that he speaks to, but his point in saying that is simply that as you start to see these kind of global changes being made, more people coming to the fruition in the economy, and Biden trying to kind of move these plans and the Build Back Better plan and transition, there's still a lot of businesses that are kind of going bust right now, and that in this transition are a little bit getting lost.
Well, and what's interesting is, and he writes, American policymakers haven't learned the right lesson from one of the most significant chapters in recent economic history, and talking specifically about U.S. and China, and because there are more shocks coming. I mean, this relationship, for those of us, for years, for decades, it's all been about our relationship with China and making sure that global companies have access to the Chinese market, doing whatever. And there was a big push by the United States to enable China to get into the World Trade Organization. Many would argue it wasn't fair because they were not a capitalistic society. There were a lot of problems, and yet we pushed big time.
Well, look at the change in tone
others
that we saw starting in the 2016 election. And Kriti, you mentioned that the Biden administration has kept those tariffs on China right now that the Trump administration put on. And I think we are seeing that shift play out politically right now. But there are a lot of politicians who probably right now regret the embracing that we saw over the last 30 years.
Yeah, and Sean Dunn actually makes that point in the very first couple of lines where he really says that back then everyone was on board, and now it's going to be hard to find a China dove or someone who's not a China hawk on either side of the aisle.
Yeah, it's an interesting story, and I agree with you. Everything Sean does, it's so thorough, it's so specific, it's so detailed, and you really walk away with a lot of information. We'll put that out on Twitter. Kriti Gupta, Bloomberg Markets correspondent here at Bloomberg News, thank you so much. We're going to count down to the close. We're just about 19 minutes away. And you are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovec. So, all right, can we go there, Peloton?
Yeah, we're going there. You've been talking about this since the show started.
I love this. Well, first of all, it was on Social Media Buzz. Our team puts out this great little email every morning, and this was one of the things that was buzzing around social media. Ryan Reynolds, the actor, tweeting this out.
He's so much more than that, Carol. He's like entrepreneur.
Yes.
He has companies. He's got the gin. He's a Renaissance man.
Married to Blake Lively.
Yeah.
3 daughters, I think they've got. They're really cute. Anyway, Peloton Interactive put out an ad Sunday in a measure of damage control, responding to a scene in the news show And Just Like That, which is really the Sex and the City reboot, where a character, not any character, we're talking about Mr. Big, played by Chris Noth, he dies after using its product.
Oh, okay.
Yeah, oh, sorry, spoiler alert. I'm sorry.
If you don't know by now, then you just...
You know what?
You've been unplugged.
It's a major spoiler alert for me. It was ruined, so I'm just going to ruin it for everybody.
Wow, that's not cool.
I think it's really been hard to hide from because it's been so out there.
Well, the season finale of Succession was last night. I didn't see it, and I haven't watched it, and I won't watch it for a few days, I think, because it's on pretty late. And I muted all this stuff in my Twitter timeline, so I hope it doesn't get...
Well, shame on us. We're playing it on YouTube. We really should have played the audio for everybody because it's really funny. But in it, there's a narration says, Chris Noth, who plays Mr. Big, says he's feeling great. He did die in the show, spoiler alert. Feeling great and asking if he should take another ride. Life's too short not to. A narration voiced by Ryan Reynolds notes that regular cycling improves circulation and reduces the risk of cardiovascular disease. He's alive, Reynolds concludes.
Okay, this is a lot of history here, though, because 2 years ago when Peloton found itself in hot water for that, Peloton wife ad, as it's called, quote unquote, 3 days later, roughly, Ryan Reynolds and the team came up with an ad for aviation gin that featured her, the star of that ad, like she had just gotten divorced. And so this is like kind of Inception-like.
I have to say, man, in terms of marketing, it's kind of wild. Because look, we're talking about it. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are lower in a key week for global central banks. The Dow, the S&P, NASDAQ all declining in a week in which we're getting policy decisions from the Federal Reserve along with the European Central Bank, Bank of England, and Bank of Japan. The S&P is down 25 points right now, a drop of 0.5%. The Dow tumbling by 197 points, down 0.6%. NASDAQ down 151, a drop of 1%. Traders today are weighing the potential impacts of less generous monetary settings amid coronavirus challenges and lofty equity valuations. So again, the S&P retreating from a record, down now by 0.6%. 10 years up 17.30 seconds, 10-year yield 1.42%. Spot gold up 0.2%, up $4 the ounce at $17.86. Another big drop for Bitcoin today, down 6.7%. 46,605 right now on Bitcoin, and West Texas Intermediate crude down 0.5%, 71.32 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
By now, Robert Califf, the cardiologist picked by President Biden to be the next FDA commissioner, should have already been well on his way to confirmation. Because the administration failed to submit its paperwork on time, Califf may not be confirmed until next year. Amid a national health crisis, this bit of incompetence is difficult to excuse. The FDA needs a leader right away. The agency has vital COVID-19 treatments to approve. It also needs to regulate electronic cigarettes and consider any number of new drug and medical device applications. At the same time, the FDA needs to make its operations more transparent. Evaluations have traditionally taken place behind closed doors, but it's become obvious during the pandemic that such opacity isn't always in the public's interest. Califf, who was FDA commissioner under President Obama, has experience and familiarity with the job. The Senate should make up for lost time and approve his appointment as soon as it can. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session. We are seeing the equity averages take another leg down. We're off our worst levels of the session, but still, in these last few minutes of trading, we are seeing investors more on the downside, more selling going into that closing bell. So we'll continue to track that. In the meantime, let's get to it.
Jessica Beamer is portfolio manager at Easterly Investment Partners. She joins us on the phone from Pennsylvania. Jessica, great to have you on the program today. How are you?
I'm doing well. It's a gorgeous day out here in western Pennsylvania. How are you, Tim?
We're doing pretty well. It's a little, I haven't been outside, to be honest, so I don't actually even know. It looks like it's getting dark here.
Soon enough.
Yeah, exactly.
Jessica, talk a little bit about how we need to sort of await the Fed decision here, because that certainly seems like what markets are doing. As Carol mentioned, we're seeing a leg lower in the equity market, but look at the signal that we're seeing right now. Investors are waiting to hear from Jay Powell.
Certainly, there's a lot of focus on the Fed this week, and I think part of that comes from the fact that companies are really entering a period of quiet as we finish the end of the year. We do have a lot more company analyst days this year than last year. I think we have something like 27 analyst days in the month of December. So there are companies that are out there talking about 2022, but really there isn't much that companies can say as we wait for the end of the year. And so a lot of the focus turns to the macro, and that turns to certainly what the Fed's going to say this week, and that's followed immediately by quadruple witching on Friday. So there's going to be a lot more volume this week in the options market and in the stock market, and I think that's really going to be driven by the macro at this point because companies are quiet.
How much profit taking do you think is going on at this point? That it's been a banner year on many accounts, certainly if you're in the equity markets, and at this point, especially in some of those big tech names, do you just say, I'm good?
Yeah, I think it's a fair question, and it's something that we're going to be looking at even into January, because a lot of investors aren't even going to reflect on how strong 2021 was until they get their final report sometime in mid to late January. But I think certainly we're focused on profit taking, but even some tax loss selling, because if you look at the S&P 500, there are 82 stocks that are down year to date, and that's 16% of the index, and they're down 12.5% on average, with a 7% decline in the last month. What that tells me is that where possible, people are going to take tax losses. Now, that's negative right now. We're feeling it right now. But my guess is over the next couple of weeks, that lightens up. And so hopefully that'll be more of a tailwind going forward. We're seeing profit taking. We're seeing tax loss selling. That's very normal after such a strong year in the couple of weeks. Starting in the first week of January, I expect to get a lot of updates on holiday sales. This was a lot more, it was a lot more widespread a few years ago, but I still expect a handful of companies to come out that first week and talk about their holiday sales. But we're quickly going to move into earnings season, and my guess is that companies cannot wait to talk about earnings, because as we saw during the third quarter, companies have a lot of positive things to say about their strategy, about what they're doing to combat all of the macro concerns that we're discussing, and they just need to get out in front of investors and lay the groundwork for what their plans are in 2022.
Jessica, what are the comparisons? I'm just trying to think about it, right? Fourth quarter a year ago, where we were versus where we are today. Are the comparisons going to be in their favor?
Yeah, I mean, it's really going to be company by company, Carol. And I think what we've seen this year is that there were some very high PE ratios this time last year in the recovery parts of the market. So if you look at whether it was consumer discretionary or financials or some other parts of the market had higher PEs, they've actually earned their way into lower PEs. What that means is that their earnings have accelerated and have delivered. So what we look at today with a 21 times forward PE for the S&P 500. Underneath that 21 times are lots of companies that are trading, in the low teens to the mid-teens, and lots of opportunities for further growth. Year-over-year comparisons are still going to be tough next year, because this year wasn't normal, last year wasn't normal, and frankly, we don't know if we're going to get a normal 2022. So I think we just stay focused on individual companies. I think
that was killer what you just said.
We
don't know if we're going to get a normal 2022. This is the quandary that the Fed and everybody else in who's trying to make projections, whether you're a market strategist or an economist, right? Like this, we just don't know yet what 2022 is going to bring.
Yeah, I think that's fair. I mean, one of the things that I like to focus on is what companies are doing to face the future. And a couple stats that I think are interesting is just the significant increase in mergers and acquisitions this year. Obviously, versus a year 2020 where little was done, but $2.2 trillion worth of deals,
it's a record
35% year to date. And of that, $700 billion are still pending. They haven't closed yet. So we have a lot of momentum going into next year. And typically when you see these deals close, there's a lot of synergies, integration creates higher margin, and then if there are proceeds from a deal, they turn into share buybacks and other shareholder-friendly allocations. And so I think that's a good stat. And the IPO market has taken off, and we see a lot of strength going into the end of the year there. So I think there's a lot of reasons to be optimistic about the opportunities across the market, but I want to be very careful and say that this does start to me looking like more of a stock picker's market, where there are parts of the market that are still very expensive and have done very well this year. And so I think you have to be very careful making broad statements, right?
Yeah, no, that's a really good point. But I agree with you that M&A activity, and as you said, if there's still thousands of deals that are just out there, and they have to, carry themselves into the new year. That does provide some really interesting energy going into 2022. Jessica Beamer, thank you so much. Have a great holiday, a safe holiday. Portfolio manager at Easterly Investment Partners on the phone from Pennsylvania. And this, as we did take another leg down, it does look like we're going to finish maybe at our lows when it comes to the S&P 500, but we are down across the board. All right, time to head over to our TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here, Taylor Riggs here, Kaylee Lyons in for Caroline Hyde, counting you down to those closing bells. Here to help take us beyond the bell. It's our global simulcast partners, Carol Massar and Tim Stenovic, bringing together all of our audience across television, radio, and YouTube. And Carol, as we move closer to the close, we are seeing equities right now near the lows of the day.
Well, this is what I love. I love watching the final minutes of trading, the last hour of trading, but in particular, what we have seen over the last 20 minutes or so is that we're seeing more selling going into the close than buying. So there's really a negative tone. Don't forget, we're counting down to that Fed meeting on Wednesday, Tim.
Yeah, seen a lot of selling in crypto, too. The Bloomberg Galaxy Crypto Index down 5.5%. Bitcoin sliding 6.6%, slipping under its 200-day moving average.
And I think we've gotten a lot of comments, Tim, that were really interesting about a rate of change on the interest rates. When, Kaylee, when the Fed moves very quickly, stocks do underperform. But Ed Clissold was saying as long as they go slow and steady and not every meeting, equities actually have been returning on average about 10%. So it really all is about how quickly you are starting to think about these rate hikes.
Yeah, and it's really going to be the attention on the dot plot for that reason, Taylor, come Wednesday. We all pretty much know they're going to accelerate the pace of the taper. They forecasted that quite well. It's really about the guidance and what the hiking cycle is going to look like in terms of duration and speed, Romaine.
And I think what you're seeing today is kind of similar to maybe what we saw last week, towards the end of last week. It's kind of positioning ahead of some of these central bank meetings here. A little defensiveness on this day here, but you're still seeing that kind of round robin across the various sectors.
And dare we say that maybe there's a little bit of profit taking going on. It's been a tremendous year for the equity markets. Maybe some tax loss selling also as we count down the last few weeks of 2021, Romaine.
Yeah, absolutely. You're basically talking about 20% gains right now on the major indices. For the day here, you're looking at a Dow Jones Industrial Average going to finish the day about 0.9%. Similar story for the S&P 500, right around the lows of the day, down 0.9%, 46.69. As we wait for those final numbers to settle here, the NASDAQ Composite right now down about 217 points or 1.4%. And the Russell 2000, which of course was a big laggard last week, looks like it's going to start the week as a relative laggard as well, down about 1.4% right now, 2180 and change. And for anyone watching Apple, Apple's going to finish the day down 2%, Carol.
Yeah, and it was really tough to be a semiconductor. Anyone in that area. The Philadelphia stocks down about 2.6%. On the other side, I'm going to say the VIX, the volatility index, up almost 2 points here, Taylor.
Well, and Carol, I'm going to hop in there because you mentioned that the semis are underperforming. They are one of the worst performers in terms of an industry group level when you look beneath the surface of the S&P 500. The biggest underperformer is actually the autos index. A big part of that is Tesla, which actually is at its lowest now since October 22nd. But by and large, it's really just the cyclicals that underperformed. It's the defensives that outperformed, the likes of pharma and food and beverage, those staples and those bond proxies doing quite well.
Why do you think all the autos fell today? Because it wasn't just Tesla. You have Ford down like 5%, GM.
It's interesting. I actually wondered if it was tied to the Harley news and just everyone moving toward
There was
EVs
a broader
and it's a market share kind of issue.
Ford is up
unwind of some of that
132.
reopening travel trade in general.
Yeah, and they've also had a tremendous run. It's a good question, and you do wonder. I think you're right, Taylor. Like, is it a concern about the economy slowing down again, and maybe people aren't going to be out? I don't know, asking for cars again. I don't know.
And the point, and to your point, Ford has more than doubled this year. GM has, of course, been on a tear, and of course, we know what Tesla is. It's just been to the moon.
All right, to the moon and to Mars eventually is what they're going to do. All right, let's go through some of the gainers, folks, on this Monday. Arena Pharmaceuticals.
What kind of car do you drive?
I'm a station wagon kind of girl.
No, you don't have a station wagon.
I really do.
I don't believe that.
I grew up in a wagon. I love station
Do you own a station wagon now?
I do own a...
What?
My name is Carol Massar, and I own a station wagon.
Okay,
Romaine,
it's actually my third
I have a
wagon.
station wagon. I have a station wagon too, Romaine.
No.
Yeah, I do.
Who? I didn't know they still sold station wagons.
Subaru
Not
wagon.
everybody can have a Maybach. I'm just going to say
A
it.
Subaru. Station wagon. Wow. I thought you guys were cooler.
All right.
No, I'm definitely not.
You know what was really cool? If you own shares of Arena Pharmaceuticals, because, man, that stock was up more than 80% in today's session. Pfizer, of course, making a deal, offering to pay $100 a share in an all-cash deal. It's about double what Arena's price was on Friday. Not quite there. You can see it kind of traded off its highs, but nonetheless closing up 80% there.
You know what I thought was great about this deal, but from the Pfizer's perspective, was it's a cash deal.
Yep.
And they talked about how a lot of this is the cash that they generated off of the COVID vaccine, and there were a lot of people questioning, the COVID vaccine boost isn't going to really last. And they're basically finding a way to sort of take the gains from that and I guess make some long-term moves here with Arena.
Right, and which is what we look for in pharmaceuticals, right? To do deals, to think about what's going to be the momentum going forward. The point is, though, there's also going to be some regulatory scrutiny of this one, so it ain't done yet. So we'll keep an eye on that. Got to mention, Matt Miller was talking about Harley Davidson. He was checking out and talking to them. That stock was up almost 20% at its highs today, finishing the day up 4.7%. Big move, saying its electric motorcycle division will combine with a SPAC. It's going to be called Livewire, and it will list on the New York Stock Exchange under LVW. Got to mention Peloton. Had to go there, guys. Up 7.3%.
He's alive. Didn't die.
Don't you wonder, like, is he just recuperating somewhere and he's going to come back a little bit later on? No.
I think this is all a setup for Samantha's return.
I do too. She did send flowers. Another spoiler alert. Okay. Anyway, an ad out over the weekend. I love this, Ryan Reynolds. We love you as well. Basically, Mr. Big.
Yes, we do.
What's not to love? It's good to be Blake Lively. Anyway, Mr. Big apparently, according to this latest ad, did not die. And he's saying he's feeling great and he's going to take another ride.
You can offer him a ride in your station wagon, Carol.
Show, right?
There's an equity angle. It's up 7.3% in today's session. All right, Tim, take it away.
All right, Ryan Reynolds, if you're watching, there's a spot in the station wagon if you want to come hang out, okay? Let's talk a little bit about the decliners today. Moving the market lower was Tesla. We heard Kaylee talk about this today. Really dragging down the S&P 500 and consumer discretionary sector there as well. Tesla, among the worst performers on a points basis and on a percentage basis, down about 5%. No real news bringing it down. Carol did point me in the direction of this Barron's article that came out that talked a little bit about a potential drop for Tesla very early this morning. Also, EVs continuing that sell-off that we saw on Friday where a lot of EV stocks got hammered. Let's talk about United Airlines. We did talk a little bit about the travel-exposed stocks weighing on the broader market today. COVID fears spooking investors amid this fresh round of negative headlines. It wasn't just United that took a hit, but finished it down by more than 5%. And then AMC Entertainment. Romaine, you spoke a little bit about what we saw with West Side Story. That missing expectations.
Did you go see this weekend?
I didn't know. I mean, I haven't been to a theater in years.
Yeah, well, I mean, I've only been to the theater once since the crisis. I saw the James Bond movie, but you talk about only what $10.5 million in sales. I mean, that's pretty weak. I mean, particularly for a movie that's, I guess, supposed to be a blockbuster, right? This is Disney.
Yeah.
This is Steven Spielberg.
Yeah, it is, and that's certainly part of it. And I also think that it's a meme stock coming back to earth. We saw other meme stocks move lower today, and AMC's down about 50% since its November high. It's not even its yearly high, but it's November high when Adam Aron, the company's CEO, started talking about selling the stock.
Do you know what any of the other movies were in the top 10 off the top of your head?
No idea.
Do you?
Yeah, well, I have it in front of me. It's House of Gucci, Ghostbusters, Encanto, Eternals, and Clifford the Big Red Dog, which I did not know there was a movie out about. But it brought in $1.3 million in the most recent weekend here.
Let's take it back to bond yields, Romaine.
Oh, yeah.
As you try to take us away from that.
Are they up or are they down?
It is a yield down kind of day. And what is so interesting that Romaine, stop that. 64 basis points on the 2-year, you guys, which is a far cry from 10, which is where we started the year. So despite some of the coming down in yields on the longer end and the flatness of the yield curve, really the focus here is on the shorter end of that curve. Carol, let me just read you a note that I read this morning from Deutsche Bank. Yields historically move slightly lower on average in the year leading up to the first rate hike, but then they turn higher almost immediately around the first hike in that cycle and rising for that year. But around year 2 and around year 3, that's when you typically see yields fall again, given the slowdown of the economy and inflation. So what they're saying is this is to be expected.
All right, so they're not surprised by any of it. So it all makes sense, logic. We love that when we hear someone's analysis when it comes to the various trades in the market. I have to say, I've been kind of obsessed with the Bloomberg Big Take today. We talked with Tom Orlick about, what could possibly go wrong. And one of the things he pointed out is the divergence that we're going to see between U.S. central bank policy and Chinese central bank policy. These are among your two biggest global central banks that are out there. And what happens to markets, to economic growth globally when you have these two powerhouses pursuing different directions. We know the Fed is becoming more hawkish, and China is really worried about slowdowns in their economy, and they are taking easier steps there.
Yeah, and this is a good point for our TV audience. You can see the central bank decisions ahead Wednesday, the Fed, of course, the BOE, the ECB, Mexico, Turkey, Switzerland on Thursday, and Japan and Russia on Friday. We talk about the idea of a policy mistake by some of these big banks, particularly in the U.S. and Europe. There are a lot of people now saying that policy mistake was already made. What we need right now is a policy correction.
Yeah, and it'll be interesting to see how Christine Lagarde on Thursday fares in a world that seems to be moving toward tightening. She has tried to stay dovish and stick with that transitory word that Chairman Powell has now retired. So how do we see language change, Taylor, not just from the Fed, but from Lagarde as well?
And Carol, we sort of just wrap it up by looking at that global perspective. A lot of the EM, a lot of LatAm, they've already addressed this big inflation. They've already started to really undergo that hiking cycle, and it sort of leaves the U.S. one of the last remaining few to tackle it head on.
I thought you were going to wrap it up with Chris North or Ryan Reynolds. Let's vote.
Haley called him Chris North.
It wasn't.
No, it's not.
How do you not
I was
know his
reading the
last
script.
name?
Blame the teleprompter.
All right, we got to run. Guys, have a good evening. All right, we'll see you again, everyone. That's going to do it for our cross-platform coverage, our market wrap Beyond the Bell here on radio, TV, and YouTube. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic. So great conversation with our TV team, Taylor, Kaylee, and Romaine. I really, I like Fed meetings. I'm a little bit of a nerd and a wonk. I think you do too. And just especially when it gets into not only the decision, but the back and forth in terms of what are the things that Jay Powell, and courtesy of the meeting with the Federal Open Market Committee, what they will stress in their terminology, the words that would be chosen, and then, of course, we'll all seize upon them, but it'll tell us maybe about what they're thinking.
Okay, so help me out. Tell me what you are watching for when we hear from the Fed chair on Wednesday. What's the question that you would ask him? How
concerned are you that growth stalls in 2022?
Yeah. Okay.
Because that, to me, will give us an idea of whether he will be hesitant to be more aggressive when it comes to policy. And we have to remember that even though in terms of those asset purchases, even if it picks up momentum and speed, doesn't mean that right away they're going to start raising interest rates. And we need to remember that. You have pointed out, how he has stressed that, Jay Powell, that it doesn't necessarily mean we're going to go from getting rid of asset purchases or, speeding up the momentum of getting rid of them and then go right into raising rates.
Look, you mentioned Tom Orlick's big take today, and what stuck out for me about our conversation that we had with him earlier was the idea that Bloomberg Economics sees a potential rate increase starting in March.
Correct.
Which is, that's like 3.5 months away.
Correct, but that's a forecast. And I mean, no offense that so many people got forecasts wrong in this environment.
And they make that caveat in the, right? I mean, Tom talked about being humble and how economists have been humbled over the last 18 months, but that's quick.
I mean, I think what we will have to see is what does the virus do as we go into the new year? What happens with weekly jobless claims and the next jobs report? I'm trying to think I was just going to pull up, when is the next Fed meeting when we get into the new year? So let me just pull it up here. I'm in 2021. So
well, we have one coming up.
The
last one of the year, of course, starts tomorrow, and we do hear from Fed Chair Powell starting on Wednesday.
January 26th will be the first one of the new year.
All right, mark your calendar.
Yeah, so that, we'll see where we are. I just think it's going to be data dependent. Oh, wait.
Where have we heard that before, Carol?
Sounds kind of familiar. You're listening to Bloomberg Business Week. Carol Masser, Tim Stenovic, and this is Bloomberg Radio. And you are listening to Bloomberg Business Week. Carol Masser, Tim Stenovic in our Interactive Brokers studio. I have to say, I kind of chuckled when I read this story that has to do with Bill Ackman, well known to our audience, and his Pershing Square Capital Management, of course, an activist investor. He says that raising the state and local tax deduction known as SALT to $80,000 makes no sense, joining the debate over a contentious issue in President Biden's economic agenda.
Yeah, why should low-tax states subsidize high-tax states, he wrote in a tweet. How can it make sense to increase the deduction to $80,000 in the Build Back Better at a cost of $275 billion? He referenced the Build Back Better Act. He put it in as BBB in his tweet. What do you think? Well, first of all, whenever there's something about SALT, it becomes among the most read, because this is something that disproportionately affects people who live in high-tax states like California, New York, New Jersey, and Connecticut.
Exactly. And fair to say, and we make choices about where we want to live, work, and play. I get that. But if you live, work, and play on one of the coasts or in a major city, your cost of living is incrementally higher.
Right.
Your cost of a home purchase and what you're going to be paying in terms of mortgage interest is probably going to be a lot higher.
And it stems back to 2017 when Donald Trump signed into law the Tax Cut and Jobs Act, which limited the write-off to $10,000. And critics of that move have largely seen that as a way to target people in blue states.
And it really...
Oh, it absolutely did. Yeah.
Not me. Folks smarter than us have said that it definitely targeted blue states. I'm not quite sure what the answer is, but it does seem like blue states were unfairly targeted, so maybe we need to figure out some way to roll it
Maybe
back.
the answer is go to Puerto Rico, like all the crypto billionaires are doing.
Ooh, did you say that? Getting a little hot and steamy in here. It's a really good point, and easy for Bill Ackman to say, right? And there's different ways that he can certainly shed some of his tax liability.
Well, the reason I say that is because it's among the most read on the Bloomberg terminal. There's a story that talks about Puerto Rico having zero taxes, golf and mansions, and creating a crypto island paradise. Check it out. This is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. It was a down day with the Dow, the S&P, NASDAQ, but stocks moved lower right at the close, and a key week for central banks. We did finish at the low of the day with the S&P tumbling 43 points, down 0.9%, retreating from a record. The Dow was down 320, down 0.9%. NASDAQ down 217, a drop there of 1.4%. 10-year up 20, 30 seconds, 10-year yield 1.41%. Gold up $4 the ounce, up 0.2%. And spot gold now at $17.86 the ounce. Crude was down 0.6%, $71.22 a barrel. Bitcoin lower right now by 7.2%, 46,331 on Bitcoin. Apple declined after the iPhone maker approached a $3 trillion market value earlier in the session. Apple down today by 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Tim Stanovic. And this definitely caught our attention last week, thanks to Bloomberg's Gillian Tan. She wrote about Cerebral. It's a startup that provides mental health services, and the company came out saying its valuation roughly quadrupled to $4.8 billion, Tim, after raising $300 million in an equity funding round led by SoftBank Vision Fund 2.
Kyle Robertson is the CEO of Cerebral. Kyle joins us on the phone from Miami. Kyle, how are you?
Doing quite well. Thanks for having me, Carol and Tim.
Yeah, thanks so much for joining us. Well, take us into this most recent round of funding that values the company at $4.8 billion. How difficult was it to raise that capital?
Yeah, that's a really great question. I mean, we actually weren't looking to raise capital, right? We're a one-stop shop for all things mental health care, and we have a vision to fundamentally transform access to high-quality mental health care at scale. And our view is that all the companies in this space combined are barely scratching the surface of this overall market and this overall opportunity. So while we didn't need to raise capital, we were really aligned with SoftBank's vision that we can build something really, really big here. And when they came to us to potentially partner, we were really excited about it and what it could mean for the path forward in terms of transforming access to high-quality mental health care.
Well, and take a step back first, because I do feel like, Kyle, that the conversation around mental wellness, mental health, even how the words we use to describe it, it's no longer, kind of pushed to the side and we don't really talk about it. I feel like the pandemic has made it a much more part of our conversation about our well-being overall and the importance of it and having access to the right care. How has that impacted what you guys are doing at Cerebral?
Yeah, I think the historical stigma around access to high-quality mental health care has been really problematic, right? You have millions, really tens of millions of Americans who historically have suffered from mental health challenges, and the vast majority of them haven't gotten the help that they deserved and needed, right? And I think that the pandemic, coupled with a cultural shift and recognition that anyone can face mental health challenges and there shouldn't be a stigma around it, has been really powerful. And so I think, Naomi Osaka, the famous tennis player, as well as Simone Biles, who's now our chief impact officer at Cerebral, coming out and saying, hey, I'm not okay, right? I can't continue doing this. And seeing public figures like that say, hey, it's okay to not be okay and it's okay to get the help you deserve and need has been really, really powerful from a destigmatization perspective. And that's really a big part of our mission at Cerebral is destigmatizing access to high-quality mental health care so that everyone will get the care they deserve and need.
Hey,
so we're really excited. Go ahead.
No, and what I was curious about is, so Kyle, what's your approach? I mean, we all know kind of the traditional approach, I guess, to getting mental care, health care. What's your approach specifically? How is it different?
Yeah, so I think for us, it's really about building the one-stop shop for high-quality mental health care. So whether you need, wellness, meditation, clinical care, whether that be medication management, therapy, counseling, being able to access that from home right, via telemedicine is really what Cerebral is fundamentally about, and unlocking supply of clinicians in lockstep with demand such that we can take wait times from traditional wait times of 2-3 months to quite literally minutes, right? So we have something called instant live visits, where we're able to know exactly how many clinicians we need at a given time, with what licenses, with what specializations, such that a client or consumer of behavioral health care can come onto Cerebral, sign up, and actually be seen by a licensed clinician within 15 minutes. That's really unheard of. And go ahead.
And Kyle, it's all telemedicine, right?
Yeah, so we're a fully telemedicine model, and this does a ton in terms of being able to unlock supply of clinicians and lockstep with demand and drive wait time.
But what are the guardrails that are up? Because if you're talking about prescribing medication as well, what are the ways that you avoid abuse? Because that's absolutely something that can happen in situations like this.
Yeah, I think one important thing to think about, right, is the distinction between telemedicine and in-person care, right? And I think historically there has been a bias against telemedicine, despite the fact that all of the clinical research supports that telemedicine outcomes are equal or actually better. And our chief medical officer, Dr. David Moe, Harvard-trained psychiatrist, actually recently published a white paper highlighting our outcomes and highlighting the fact that, outcomes as measured by symptom-based rating scales like the PHQ, the GAD, the ISI are actually equal or better with telemedicine. There absolutely need to be guardrails in place, and there absolutely are for Cerebral and other telemedicine organizations. But I think it's important, this recognition, supported by clinical research, that telemedicine actually leads to equal or better outcomes, and most importantly, better access to care.
Yeah, you do wonder, and I think this has certainly been one of the conversations that we've been having over the last 18, 19, 20 months about, people who haven't been able to access mental health care, and that by going virtual, it's really opened it up to a lot of people. Hey, Kyle, sit tight. We're going to come back and continue the conversation. We have been talking with Kyle Robertson. He's the founder and CEO of Cerebral, and we'll continue talking about it in their latest fundraise. Because what I do wonder, too, is, what's the plans for growth? Partnerships, obviously, a big part of what they are doing and their, growth going forward.
I also got to ask about licensing, because this stuff is different on a state-by-state basis. So do you have to match potential patients with providers who are in that same area?
It's a good question. But this idea about the guardrails, I think, is really important, because you want to make sure people are being diagnosed correctly, and sometimes that is something that face-to-face can be really crucial. All right, we're going to continue with him in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. We're going to continue with Kyle Robertson, founder and CEO at Cerebral, really tapping into what's been, I feel like, another one of the major themes coming out of the pandemic, our mental well-being.
Yeah, recently coming off a fresh $300 million raise, bringing the valuation of the company to $4.8 billion. We're going to have more with him in just a few minutes. In the meantime, a check of business news and how the trade ended up. Here's Charlie Pellet.
We ended up lower, and Tim, we saw a surge of selling into the close. In fact, the Dow, the S&P, NASDAQ closing at or near session lows today. Right to the numbers. We'll give you the why in a moment. With the S&P tumbling 43 points, down 0.9%. The Dow dropped 320, down 0.9%. NASDAQ down 217, down 1.4%. The NASDAQ 100 index, packed full of technology names, down 1.5%. S&P retreating from a record, and to be clear, a lot of that selling coming in the final few minutes of trading. Markets around the globe preparing for a wave of central bank decisions this week. Wednesday, we will be hearing from the Federal Reserve. After the bell, J. Jill reported comparable sales for the third quarter up 42.2%. After hours, J. Jill shares, they're up now by 20.7%. So it was a down day with the Dow, the S&P, and NASDAQ all declining. As for some of the other factors that drove today's selling, Jessica Beamer is portfolio manager at Easterly Investment Partners, and she was our guest right here on Bloomberg Business Week.
We're seeing profit taking. We're seeing tax loss selling. That's very normal after such a strong year in the market. I think there's going to be some very strong conversations going into next year about what to do with this higher and higher equity allocation. And that's where Tina comes in with there is no alternative across the asset allocation choice. And I think a lot of people are going to stay in equities.
Citigroup says it has named one of its largest and most diverse classes of managing directors in recent years. 306 employees nabbing the title. Globally, women make up almost 35% of the total. More than a third in the U.S. are Black, Hispanic, or Latino, or Asian, according to the memo. Today, Citigroup shares down by 0.9%. Recapping stocks lower, retreating from a record. S&P down 43, a drop of 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest. Still with us is Kyle Robertson. He's Cerebral founder and CEO, and they are a mental health services startup, and we are talking about them because our Jillian Tan wrote this great article about their valuation roughly quadrupling to $4.8 billion after raising $300 million in an equity funding round led by SoftBank Vision Fund 2. Kyle, thanks for staying with us. You're there in Miami. We just want to ask you, first of all, Jillian's story has this great picture of you there with Simone Biles, Olympic gymnast, incredible athlete who walked away from the Olympics, putting her mental health above her quest for gold. It really stood out, and she, I think it created and sparked a lot of conversations. I know certainly for us in our newsroom. Talk us about the interactions and conversations you've had with her and understanding maybe as somebody who's running a company, but really understanding, what's involved and what's needed really by those who are trying to improve their mental well-being.
Absolutely. I think Simone's voice when in Tokyo she said, "I'm going to stop here, right? My mental health is more important than gold medals." It was really powerful, right? It was really powerful for a lot of people, myself included, as the CEO of a mental health company, right? I actually was sitting in a hospital bed this summer because I was suffering from a MRSA pneumonia infection when I was watching the Olympics, and my mental health was suffering, right? Being locked up in a hospital bed, right? Not knowing what was going to happen. And seeing her say, right, my mental health is more important here, and I'm going to stop, was so powerful for me. And I think when I saw that, And when our organization saw that, we knew we had to partner with Simone, right? We knew we had to partner with Simone to tell the world that taking care of your mental health is more important than anything, right? And that it needs to be prioritized, it needs to be destigmatized, and people need to get access to the care they deserve and need. And that's what our organization is all about. That's what Cerebral is about. So we're really excited to be partnered with Simone as our Chief Impact Officer. And even though we've only been working with her for a few months, she's had an incredible impact.
I'm so curious about the relationships that you have with clinicians, with providers, and how you're able to treat people in different parts of the country, because there is this patchwork of rules and regulations. I mean, correct me if I'm wrong. Yep. A doctor has to be licensed in a certain state, correct?
That's right, yes. So there are licensing requirements, but one of the benefits of telemedicine is that, particularly in rural areas where there's not a lot of access to high-quality mental health care, right? A small town in Appalachia may not even have a psychiatrist, right? So we can get folks connected to the right level of care for them. Does the clinician need a state license? Generally, the answer to that is yes. However, our clinicians are largely cross-licensed across multiple states. So they may not have to sit in the same state that the patient that they're providing care to is sitting in, right? But they do have to be licensed. That said, there isn't a movement today towards universal licensure.
Right.
And, we believe that it is a positive movement and that it would be good for society, right? Because it is a lot more efficient. And there's no reason that with the proliferation of telemedicine that a clinician who's licensed in California but not licensed in New York or Georgia shouldn't be able to provide care to a patient there, right? So it's definitely something we believe in, but we do take advantage of licensing clinicians up in states that they're not physically domiciled in today.
Kyle, you have more than 23 clinicians signed up, according to Jillian's article that she wrote about your fundraise. Are these clinicians working full-time for Cerebral, or are they doing this as kind of a side hustle in addition to seeing patients in person, perhaps, or using other telemedicine platforms?
Yeah, so 2,300 clinicians to clarify there, but absolutely our clinicians are a mix. So we have over 2,300 clinicians across the country. They're a mix of full-time and part-time, and that's intentional, right? Because we want to meet the clinician where they're at and to be able to help them fill in their schedules as needed, right? Some clinicians want a part-time situation, right? Where they can get supplementary income, where they can work from where they want, when they want. Some folks want to work part-time in general, right? Others do want to work full-time via telemedicine. So in short, it's a variety. Our average clinician works over 20 clinical hours a week with us, so it tends to be fairly involved with our clinicians. However, there is a variety of structures.
So where do you see it all going ultimately? I know you've got partnering or partnerships with Cigna and Anthem. My understanding, and just reading in for our time with you today, is that you are looking to be an in-network resource for, I think, all insured Americans by the end of 2023. So what exactly do you mean, and how do you get there, and will you get there?
Absolutely. So I think that's an incredibly important question. A year ago today, we were not in network with any of the insurance carriers, right? We launched with Cigna in January of 2021. We now are working with Aetna, Cigna, United Health Group, Blue Cross Blue Shield, Medicare, et cetera, right? And our vision, to your point, is to be in network with every health plan in every state, such that regardless of your insurance carrier, regardless of your geography, regardless of your income level, regardless of your race, you can come to Cerebral and get the care you deserve and need, and it's affordable, it's fast, it's convenient, and it's high quality, right? That's the vision for Cerebral, and we have the right team in place to get us there, and fortunately, I think regulators, clinicians, patients alike are recognizing the need for high quality care that enables patients to get the care they deserve and need when they need it, right? So that's what we're focused on as an organization.
Yeah, no, it's pretty, and it's really pretty astonishing, everybody that you're hooking up with in terms of the healthcare system. We're talking with Kyle Robertson, Chief Executive Officer at Cerebral, on the phone from Miami, and this is certainly one of the big topics of the year.
Hey, Kyle, help us understand what exactly. Do we have time, actually? Yeah, I want to make sure we have time for you, Kyle. Help us understand how you expand here geographically, because I know a big part of this is working in the United States and the patchwork of regulations state by state. But how do you have your eyes on international expansion?
Really important question, right? Because mental health challenges don't discriminate by geography or nationality, and unfortunately, access is really challenging across the globe, right? So we are in all 50 states of the United States and working with a variety of different health plans as well as government programs in the U.S., but we recently launched in the United Kingdom, right, and won our first contract with the National Health Service there, right? The idea being that by starting to work with single payer systems like the NHS, we have a roadmap to grow and expand in Europe, right, where there are a lot of single payer systems. So in short, what I would say is that mental health access is a huge challenge, not just in the U.S., but globally. And we absolutely have global ambition, which is why, within a year and a half of launching in the U.S., we launched our first international geography being the U.K. So definitely a big priority across Europe, across Asia, across South America, and definitely a focus moving forward.
Hey, Kyle, just got about 30 seconds left here. The capital raises, what are you going to use the money for? And is the plan also to go public? Just quickly.
Yeah, absolutely important question. For us, it's about building the one-stop shop for high-quality mental health care. So that means all products, all conditions. So expanding into more wellness products like meditation, expanding into new conditions like substance use disorder, like schizophrenia, and really being that one-stop shop for payers, consumers of behavioral health, clinicians alike. That's a big focus for the fundraise, as well as continuing to expand our payer partnerships, expanding globally, and really leveraging data science more and more as we grow.
All right, we'll have to get back to you about going public if that's part of it too. Kyle Robertson, Chief Executive Officer, founder of Cerebral, joining us on the phone from Miami. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Down Monday, stocks diving at the close with the S&P dropping 43 points, retreating from a record down 0.9%. The Dow was down 320 points, also down 0.9%. NASDAQ, though, down 217, a drop of 1.4%. The NASDAQ 100 index, full of tech names, lower today by 1.5%. Markets around the globe are preparing for a wave of central bank decisions. Wednesday, we'll be hearing from the Federal Reserve. 10-year yield, 1.41%. Spot gold up 0.3%, $17.87 the ounce, while West Texas Intermediate crude fell 0.7%, $71.20 a barrel. Bitcoin down today by 6.2%. Elon Musk has been named Time Magazine's Man of the Year or Person of the Year. Beyond Meat shares, they are gaining after hours, up 4.9% after Piper Sandler upgraded the stock to neutral from underweight, saying an American nationwide launch in McDonald's appears to be coming late in the first quarter of 2022, which was earlier than they anticipated. Recapping, stocks lower, S&P down 43, a drop of 0.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we all know about the numerous studies that have done by McKinsey and others for years about how having a diverse workforce, an inclusive workforce, diverse and inclusive executive suite leads to better financial performance. Well, Tim, our next guest has been working with others to create D&I leadership teams.
Kay Formanek is the founder and CEO of Diversity and Performance, joining us on the phone from the Netherlands. She's also the author of Beyond D&I, Leading Diversity with Purpose and Inclusion. Kay, how are you?
I'm doing wonderfully, and thank you to be on your show.
Well, it's really great to have you on the program. What was the moment during your time at Accenture, during your career, that you realized that everything you had learned and talked to companies about, you needed to write this book about diversity and inclusion?
Yes. Well, over my 25 years at Accenture and thereafter, as I had established diversity and performance and was working with many other organizations as well, what I saw is that leaders were struggling and significantly struggling in terms of leading diversity. And there are so many investments that are being made, and they're actually not moving the needle. What is occurring is that you're getting people who are feeling quite cynical about diversity, anxious about diversity. And what I saw is that many leaders actually wish to lead diversity, but they're just not confident how. What is the process? What are the things that need to be done? So this book is really inspired to create a way forward and look at diversity not as a soft issue, but really to create an opportunity for leaders to run diversity like a business.
It's a handbook for leaders, and I could see it in at a business school because there's a lot of information, a lot of background, a lot of explanations. It really does read like this incredible handbook. Hey, Kay, what I'm wondering is, we do talk a lot about diversity and inclusion. We have a gender index here at Bloomberg. We track a lot of things. What's the wrong conversation that we've been having, maybe not just Bloomberg, but just the world at large about D&I? What's the right conversation to be having?
Yes. So what I see, and just building up to your question, is that what I'm trying to do is answer the question, the why, the what, and the how of diversity. So you're very right when you say it's a handbook. And what I find when I actually am working with organizations, and I say to a leader, so why are you pursuing diversity? And the reply is, well, you know. And I said, no, you need to be very specific. And I think where it goes wrong is that very few leaders are really able to articulate why diversity is essential for their mandate as an organization and for their transformational journey that they're on. And if you're not able to articulate why diversity is important for that, then it is difficult to work backwards and say, so what diversity dimensions am I even referring to what is the level of ambition and capability that I need, and what are my gaps currently. So I think the issue is that we are starting to measure things on diversity. Usually that is being measured within the industry, and we're not really connecting it to the strategic narrative. And what the problem that it presents is that you have diversity occurring a little bit in a vacuum. People start taking diversity seriously if a leader is able to say, diversity is critical, and if we do not have it, this is going to be the implication. And because it is so important, it is going to be attached to these type of strategic goals. And as a consequence, these are the investments we're going to be making. This is how I'm going to be evaluating my leadership team in terms of their contribution. And these are the capabilities that we need to build. And that is the narrative that is missing currently.
Kay, when you look across the landscape and given your experience, can you give us some examples of companies that are just doing this really well?
Well, let me take, for example, Unilever. Within the book, I really described that there are 5 evolutionary stages of diversity performance. And the one stage is not better than the other stage. What is important is to know which stage you want. So there are some organizations who are simply pursuing diversity because they wish to have compliance to regulations in Europe to quota. Others are saying, look, I need it at a minimum not to be penalized by my customers and my employees. The third one, and this is what you refer to in terms of the McKinsey research, are saying, I really believe that diversity is converting to better performance, whether it's innovation or engagement or better decision making. And the fourth type of organizations are looking at diversity because they believe that without the sort of 360-degree perspective, they're not going to be able to anticipate their environment, be agile. But the fifth type of organization is those who have taken diversity as a strategic anchor, and it is not only to advance performance internally to their organization, but externally to their stakeholder group. And I think Unilever is sitting there.
Yeah.
So if you look at Unilever, they're saying diversity is one of our strategic pillars. Number 2, we are pursuing diversity to have congruence to our customers and to create more equity, equality, and access societally. They go as far to say that of the 17 UN sustainable goals, they are specifically pegging their diversity into gender equality and access.
No,
So
Kay, you know what?
you see
Unilever, I totally agree with you. Having talked with various Unilever executives, including the CEO, I mean, they really are all in on this. And you're right, it's not just about what you're doing internally and the culture of a company, but it's the supply chain and everybody you work with. So definitely some interesting things to think about. We've got to run, but really appreciate the time with you. Kay Formanek, she is founder and chief executive officer at Diversity and Performance, and her new book out is Beyond D&I, Leading Diversity with Purpose and Inclusiveness, and certainly something to check out.
Well, let's check out what's going on Sound On, which starts in just a few minutes. Joe Matthew joins us now from Washington, D.C. Joe, what's on the agenda?
I miss you guys. Just get 1 minute in the studio with you, and I think about you all the time.
Oh, thanks.
What can I say? It was fun to be there.
Just
I'll be back. I promise you I'll be back. We have so much to talk about today because these are the waning moments of the year in Washington. We'll do the obvious, but we're also going to be joined right off the top by Representative James Comer of Kentucky. What a couple of days they have had. He'll be joining us from Paducah with the latest.
Well, I'm looking forward to that. Our hearts go out to everyone around the nation who's dealing with incredible tragedy and loss right now. All right, that's going to do it for the Monday edition of Bloomberg Business Week. For Tim Stenovic and the whole BEW team, have a good and safe evening, everyone. We'll see you tomorrow. Stick around for Sound On. This is Bloomberg.